Right, mic check in my live stream. I think I am live. I'm just waiting for the YouTube screen. Guys, sorry for the delay, man. Everything that could have possibly gone wrong went wrong. Everything that could have possibly gone wrong went wrong. All right. Yeah, it's just a big mess. I'm just going to wait for someone to give me a mic check. Let me know if you can hear me. If someone is on the other side of the screen, let me know if you can hear me. I'm just also going to just mic myself up. I just about 10 minutes ago, put a lot of, accidentally knocked over my glass of water for the war room. So I have no water for the next 2 hours. I've just got juice, but I knocked over my water. Mic check. You can hear me well. Fantastic. Right. So all over my computer and my screens and keyboard, water just ran through. So I don't know, what's going to happen. We might have a water problem, which means I might have a mouse problem. So for now, my mouse is a bit sensitive. It's sticking a lot. It's not, doing all the right things it needs to do. And then it'll just be based on how bearable we can make this class. So if you can just give me a second in the background, I'm actually trying to open, specific windows, my preparation notes, etc. And then if I feel like I'm failing you guys, unfortunately, we're not going to be able to have a war room because both my mouse pads, I've got an external mouse and a mouse pad. Everything is just sensitive. I can't get my top 3 screens to switch on, but I can operate with the other 3 at the bottom here. Right, but otherwise, hope you guys are doing good. They will be working overtime for this information. Right, so let's see. Right, so let's just maybe the laptop and the machine will dry. Will dry as we talk. I don't know, but I wanted to give you guys quickly and shake my hand, by the way. It's just a terrible start to a war room, but nonetheless, it's going to be a good day. So shake my hand. Hope you guys are doing well. I wanted to quickly give you guys a rundown of what's happening in the markets. Number one, I'm trying to remember all those shortcuts. You can have shortcuts where you can move across windows and pages without necessarily using your mouse. I don't know how successful I will be with that, but so far so good. Right, so I wanted to give you guys a quick rundown of really what's been going down in the markets. We've got a lot of big stuff going on. We've had FOMC finally make the first big meeting of the year, and that's important, right? First big meeting of the year is always important, setting the tone. Are we continuing it last week? This is very disappointing. I'm actually very flustered right now with my entire setup. Nothing is working naturally, water all over it. I really don't know what to do. I honestly don't know what to do. Right, so anyways, while I keep pressing buttons that don't seem to care for me right now, FOMC happened, I think it was about Wednesday or Thursday, I can't remember. I didn't watch it live, right? I was busy recording the podcast, so to speak, and I thought that was more important at that time. Right, so I've got finally my charts in front of you, so that's good news. The unfortunate part is I can't zoom in, zoom out, make this big, make this small. Wow, man, this is so disappointing. I don't know what to do, guys. I don't know what to do. It's not responding at all. None of them are. Right, so anyway, long story short, maybe let's just quickly talk to, a couple of things. I will look distracted. I do apologize. But that's because in the background, I'm actually trying to conquer this problem. We need to have a war room today, and we really need to kind of like set our sights on where all the big money is. All right, so we shall see, God willing, how far we can get with this current technological problem. Right, so look, there's been a crypto sell-off. Sure, stocks are falling. Sure, mid-month, medium-sized panic, right? Very sizable panic, yes. But none of it is surprising. I don't think it's surprising. The reason why I'm doing a recap in today's war room, and I want to look at Bitcoin, Nasdaq, and maybe Ethereum as part of the recap exercise, is because I think a lot of people just forget, or not forget, but you're not yet saturated enough in market cycles. and that's okay, right? So because remember, imagine you started trading in October, November last year, or August. Imagine this, you're about to clock your first year of trading and you got in 2021, where it was pretty much the year of crypto, right? It was a massive bull cycle last year. Then obviously a bear market is completely new to you. So I always tell people, if you're 3 years and under in the markets, you're still quite a baby in market cycle settings. And there's a lot of wisdom and education that actually comes from my market cycles, right? So my mouse has given up. It'll do the dance, but it won't do anything else. It won't click on anything. It won't. And the guy who's my tech guy, obviously today is a Sunday. All right, so we got, oh, look at that. We got movement. All right, so I don't know what I did, but we are happy about it. Right, so it kind of knocked me off, guys. I'm sorry, man. My energy was off. I was starting to feel low. You know, I was starting to get, you know, a little bit, you know, agitated, so to speak. Right, but I don't have access to my fourth screen, unfortunately, it seems, and that is where I'll see what people are saying on the YouTube live chat. All right, there we go, I have it. I'll suggest you also look at oil. All right, cool, thanks, Alan. Mrs. Mtunzi, I see you, Lincoln. All right, cool. Let's get cracking. Right, so mouse is kind of working. Right, so market cycles are a very important part of your trading, because one day you'll find yourself waking up in bull market, bear market, but most market cycles come with fundamental underpinnings to help you understand why this is going on the way it is. I hope the mic isn't dancing. I hope you guys can hear me correctly, right? So the first thing I want to quickly talk about is just that. I want to set the scene for why markets have been behaving the way they behave and what I think is going to happen, or what I think you really should be, you know, looking out for, right? So I have no idea which screen I'm sharing. I thought I was sharing my charts, but it seems to me that on the replay, okay, I am sharing charts. All right, fantastic. Right, so fundamentally, number one, FOMC did it again, right? So it's January now, end of January, we're going into, you know, February, March. So that's the first financial quarter of 2022. And the FOMC came out a little bit strong. Right now, central banks, and this is so important. I could do it with Bitcoin. I could do it with Nasdaq. Let's just first start off with Bitcoin. I want you to understand what the FOMC said about a few days ago. I want you to see how the markets feed off that. But I also want you to sit down under the teachings of the markets, because they will tell you everything you need to know. Look at that, guys. My screen is moving. The mouse is working. Me excited. Right, so let's go to March. Let's go to March of last year. Let's go to January of last year. So look at this. Come on, man. Come on, man. 365 traders, if you've done my course, you know I get excited and irritated at the same time when I repeat myself. This is crazy. Banks think in 3 months, take profit in a year, in a 10-year plan. This is where the markets were on the 29th of January 2021. This is where the markets are on the 30th of January 2022. What I said to you has still remained true and foul. You know, it's amazing. Where market started, that's where we are. You have to sell off a rally, not all the time, but most of the time. This rally was sold. It rallied from the January the 28th, 29th last year, all the way to about April. Wait a minute, April. Why is that significant? Markets think in 3 months, January, February, March. First financial quarter, 3 months. On the next financial quarter, price readjusted from April all the way back down to what? To June. Why is that significant? January, February, March, April, May, June. 3 months perspective, financial quarter to financial quarter, all looking for a 1-year take profit plan. And then there was a big rally all the way up there, and now we're back here in January, right? So again, because you're trading every day, and we'll talk about this in the trading psychology module. I've labeled that under conviction. When I talk to you guys about conviction, I never refer to me and you's conviction. We need to talk about smart money's conviction to move price and their commitment to certain price levels, right? All I'm looking at here is a chart that's just completed its cycle. So one thing that I cannot do yet, which is bizarre, is minimize or maximize my screen. Is it okay if I kill my video just so I can get a little bit of more real estate on the screen? All right, so the other problem I'm observing is I will probably not be able to share my screen, right? We're really working on limited stuff today, right? So I was going to minimize this so you can see it, but let's go to weekly. Weekly will make it a little bit better. Right, so this is all that's happened. This is all that's happened. You've had price create a higher high, right? Honor this, beat this previous high, and then try to create a lower high, right? So this is normal. This is all part of a corrective plan. What would be not normal and interesting is if markets do this and then close lower. Then we've got a lower low, and then we've got a real bigger bear market, right? Which is what Leroy wants. I want that, right? So I'm not trading that yet now, but that's what I would like. Why? Because it will give me an opportunity to buy a Bitcoin a whole lot cheaper for the little ones in my house, right? So that everybody gets another coin in their long-term wallets. But if that doesn't happen, this correction here is perfect. There's literally no argument. Now, let's talk to the fundamentals. Remember, I did put out in all the posts and texts that I will teach for about 20 to 30 minutes of tonight's war room before giving out signals, because you have to understand, you know, the playing field that you're in. So let's go back to the bigger point. Let's look at January last year, and let's link that to FOMC, the governor, the Federal Reserve, right? Because that's absolutely important. Now, central banks took a lot of action in March of 2020. This is 2021. Let's scroll all the way down until we find March of 2020. You can see there I marked out some structures. That's September. We're still scrolling down until the big breakout. That's in July. Ugh, I've messed up a trend line. Let me just quickly fix that. There we go. March 2020, April. All right, so down here at the bottom of March 2020, and I just want to see why this trend line looks off. I apologize, but see, I can't reset my chart. I cannot reset my chart, which is absolutely ridiculous, right? So all these lines, we're teaching lines, me being dramatic when I teach. I'm just going to remove that, and then I'm just going to look for March of 2020, somewhere down here, surely 2009, December. All right, so there it is here. All right, so this is it. Okay, so I'm just going to remove all these teaching lines. I think I was teaching people, you know, counting cycles or something, waves or whatever. Right, and I'm going to leave this there, and I'm going to remove this red square because it's just going to confuse us. When we go down to the lower time frames as quickly as possible, delete that, and then I'm going to just remove a lot of unnecessary lines just to keep this chart clean for you. Right, so we've got this. I want us to focus here. This is COVID, February of COVID 2020, right? So 2 years ago, right? What happened was, because of COVID and its impact between January, February, and March, right? Because it's a new disease in 2020. The federal banks across the world are shocked, shell-shocked. Things are shutting down, economies are shutting down. We need a plan. So what do? Immediately to save the economy. At the back of these guys' mind, all of them, just remember, they are always going to work every day to prevent another 2008, right? So that's their bottom line. Not a long-term cycle of a market crash. You can have market crashes that last 2 weeks, 3 weeks, 4 weeks, 5 weeks, no problem, but not 2 years, right? And then a risk of sentiment. Euro USD has been falling since 2008. Pound USD, all your sell profile assets come from those crazy big market crashes. You want to avoid that most of the time as a sober level, FOMC or a central bank in general. So because of that, in March 2020, to help the economy and its citizens and all that kind of stuff, what happened was they created a new type of policy, a monetary policy to address this, which was lowered interest rates. So you kill the interest rate completely. You just kill it. Your country's interest rate is killed. You weaken your currency, and then as you're killing low interest rates, you introduce QE. Quantitative easing. So they started pumping the markets with a lot of money, printing money, printing money, printing money. What that does is it weakens your national currency. So the dollar fell. And when the dollar falls, we can see everybody ran to put money in Bitcoin. Why? Because you, as an investor, you don't care. You really don't care about macroeconomics. You don't care about the future of the economy of your country, of other countries. As an investor, you care about your personal investment, right? That's how smart money thinks. Where is the best place to put back for a dollar? These are literally whales and retail traders in Bitcoin. But the same is said for Nasdaq and all those things. Money went out of US Treasury bonds, right? Because the government can't pay a lot on those bonds anymore because they have reduced and killed interest rates. When you invest in something in the government, in the state, in a bank, you get paid by an interest on it, interest principal of the original investment. So when that was killed, right, there was a massive pump to the upside because money, literal money, kept chowing, coming in. And this is where I kept begging people to buy Bitcoin as low as 3,000 US dollars just 2 years ago. All right, so now, prices falling here up at from 65 to 30,000 and people want to cry. You want to cry because you're going through emotional damage. You didn't buy low. If you bought up here, you have to wait for where you bought to become a new low. That's going to take time, but there's a lot of room for that to happen. All right, you just need to hold. I like thinking in 3 years. For people who are new to investing, just think in 3 years. Don't touch your investment until 3 years has elapsed. Then you can go, I actually lost. It was a bad investment, or damn, I'm so glad I didn't close. Right, so long story short, this is now happening now. Now, COVID is over, not really, but economies are recovering. Lockdowns are not really a thing. Vaccines are back, right? And in America specifically, because we're looking at the FOMC, in his last meeting, he brought up all these statistics about COVID, the Omicron variant and all this stuff, job employment numbers doing well. I mean, I was on top of you guys last year, bringing you weekly updates of every single fundamental news to prove why supply and demand was more complex and more sounding as a trading strategy than purely trading fundamentals. I taught you guys how all these things intersect and interlink, and supply and demand kept leading us forward, that there was going to be tapering because, again, the FOMC's thesis, his argument is, we're moving out of this COVID pandemic mode and we're going back to economic productivity. Because of that, all the things they did in March 2020, we need to reverse that stuff. So now we need to come back to our monetary policy and we need to start to fix things. Number one, can we increase interest rates? Not yet, because we're still busy tapering. But as soon as we're done tapering, yes, we can. In the previous meeting, he seems to think on the 16th of March, there might be an interest rate possible change, right? So 16th of March, ushering us into the second financial quarter. So what did the dollar do? If you check your charts, DXY exploded. Why? Because the dollar loves a good interest rate hike. But another thing that they did was, well, we've slowed down QE. Remember, that's the whole point of tapering, is to slow down the printing of money and slowly start to introduce a deduction week on week, month on month. And the specifics were there in our previous videos. I won't get into that right now. And I'm talking a little bit fast, because I just want to give you guys a quick recap so we can get on to some trade calls for today. Right, so long story short, that the wheels have turned. Interest rates have to go up soon into the future. Not only that, but in terms of monetary policy, there is now an adjustment that needs to be made. And so the first big thing that happens is government treasury bonds become strong. And I brought this up in the previous war room, I think about 2 or so war rooms ago. So all the things that would have given you less profits 2 years ago are now back on the table to give you lots of profits. As a big investor, you want to start to pull out of risky assets. You want to even out your portfolio. Like my portfolio is completely uneven. My personal portfolio. The portfolio of my corporate clients is very even, because my corporate clients want to see 15 to 16% gains annually, right? That's the contract. Whether every year I give them 80% or 90%, they're fine with that, as long as I never go below 15%, because the banks gives them 3%, right? So as long as I can 4x their expectations, I've got happy corporate clients. But in terms of investors thinking about the investment portfolios, they would far much more always have more money in a shielded, protected, safe investment like a government yield bond, which is guaranteed. Nothing can go wrong. If something goes wrong, the government will pay. But now that the monetary policy is shifting, you're going to get interest on that. So you're going to make a lot of money on it, and it's safer than risky assets like Bitcoin, safer than stocks. Nasdaq is falling, Dow Jones is falling, because your stocks and your cryptos are all very, day-to-day trading, day-to-day volatility, offers, bumpy roads. So there is money being pulled out of the markets, right? So I hope that point is absolutely clear. I'll be slow to check charts on the YouTube, but please keep talking to me there if you have any questions from what I've said so far. And then, you know, as I switch windows, I'm still struggling with the mouse here. I will then, you know what to do. The next thing to kind of like keep in mind along all these things is point number 2. There's been massive fears. So I tried when I was preparing for this, I tried my best to quickly scan, you know, if I missed out on any big news outlet. But in the last week, and week, I mean in the last 10 days, 10, 11 days, so almost 2 weeks in the markets, these are the four main things that have happened in the world. All right. So you already understand there's outflows happening on this chart right now. Money is leaving risky assets, Nasdaq, blah, blah, blah. But when it comes to cryptocurrency, Singapore is a very crypto-friendly country. I mean, it's just brilliant. I mean, if I was to, in 2025, when we open our first international offices, it's either Singapore or Dubai. Those are my just two. You know, I'm very focused on those things. I just need to still learning around legislative stuff. We're going to do our first visits later on this year because it makes sense for a tax haven country. But Singapore has always been very crypto friendly. Now, a few days ago, it was announced that Singapore halted crypto ATMs marketing. Now, crypto ATM, just think about it's a normal ATM where you go deposit cash into the ATM and you get crypto back, right? You get crypto for it. And the marketing apparently that was being done around this in Singapore is extremely aggressive. And all of a sudden, there are some officials who are afraid about, you know, their citizens, etc., being taken advantage of, or you know, like the usual general government step back, 2 steps forward, 1 step back. And so that was a bearish sign in the markets. Big deal, no big deal, it doesn't really matter. The big point is Singapore has always been one of those countries that is extremely crypto friendly. So for them to take a big step back on crypto ATMs sent a bearish signal. Number 2, Russia, right? Russia proposed a ban on the use of crypto, number 1, and also on crypto mining, right? And this is Russian style, guys. Someone asked me to look at the oil charts. If we can get to oil, please, dear computer. Okay, it looks like for the most part, I'm fine. Crude oil, and I just need to click. Yay, it worked. Right, so Russia is not part of OPEC as like an institutional organization body of the big oil industry. However, Russia is the second largest, biggest producer and exporter of petroleum across the world. Therefore, it's one of the biggest heads in the oil industry. In 2020, when COVID happened and I was preaching buy oil, stop, cancel, I literally went crazy on Facebook because I always tell people I'm not your financial advisor, blah, 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 blah. But I literally told people don't pay medical aid, don't just buy oil. If you think about it, you still need fuel, and this thing was at a negative. My broker, Trade, IC Markets, and another broker that I used in 2020, probably one, I can't remember which was the third one, they refused at some point in time for me and most of their clients to keep selling oil because oil got to a negative. They say there'll literally be a message, even IG Markets did it, there'll be a message that popped up that said the only time you can take a trade on this particular asset is if it's a buy trade. They were looking for retail traders, institutional traders to start to create a bottom. Well, what is cheaper than something hitting 0 or a negative number? It's a no-brainer, right? You'll never get a beautiful trade like this in your life. There is no loss after this. It can only go up. That being said, and don't forget about the part where I said Russia is so connected to oil because it's the second largest petroleum head in the world. Russia was also the major problem of the oil crisis outside of Corona, outside of people not being able to take flights last year because it refused to reduce its supply when there was an obvious need to reduce the supply and the production of oil. Why am I bringing this up? Because Russia, even though depending on oil for its economic growth, was a big participant in crushing oil last year. They do that a lot. They are the mafia gangster. They like buying the bottom. So it is not surprising that Russia would do the exact same thing when it comes to cryptocurrencies, threaten bans, I showed you guys last year that at some point last year, China had the most Bitcoin holders, the Chinese government, and yet it was the same government banning crypto mining, right? Creating the dip is what big institutions do. To create a dip, you need to shake off the little guy, the guy who's got no long-term perspective, no conviction on his investment and trading ideas. Those little guys are millions of them. You shake them, you take their money, you drive the dip down, you buy the bottom, you consolidate your positions. So you bought oil here, you bought oil there. And I can see here, Mr. Allen, I think it's not going to go on the student signal spreadsheet, because I did send out a message at some point in the private Telegram group that, you know, I'll be looking at cluster 1 for currencies for now, but we're going to wait to buy here oil. I did do oil last week, so I won't spend too much time. I'm going to wait to buy oil here. But so I'm going to let this go without me, and then I'm going to wait for price to come back down, unless if price creates momentum that I should be worried about. For example, here on the daily. So I'm not going to waste too much time on oil, sir. I've done oil. I don't know who asked for oil. I'll check, but you know, I would be worried about here, but you know me, if there's a lower demand, I'm going to take the lower demand. I'm always going to buy low. So I'm not even interested in shopping there for now. I'm going to wait for a full retracement to go down back there. But oil is very ready for a pump up. You know, oil is very much ready for a pump up. I am being roasted by the sun through my front window. Yeah, so anyways, that's oil done, and Russia banning Bitcoin created a serious problem, right? And then world leaders met in Davos, and they called for global collaboration on crypto. So all the world leaders met about a few days ago, and basically about 5 days ago, and it was all about how do we regulate cryptocurrency? What are the rules that you can put in your country, and I put in my country, we put in the country, and everybody has the same rules, right? So regulation and all that kind of stuff. Crypto doesn't really like that. I think we need a little bit of regulation, but we don't want too much regulation, right? And then lastly, but not least, on the Bitcoin and the market crash, guys, Nasdaq included, all those assets of yours included, we needed a take profit, right? We needed a take profit. From a technical perspective, let's now look through with the power of hindsight. Look at this. August 21st, right? So for those technical gurus, you've got to hit a shorter pattern here, right? Which is normal. There, simple. There's your neckline, price heading to edge off. We bought once here. I think I got stopped out. I don't remember. And then I haven't bought since then. Somewhere down here, I had some couple of good buys that I wanted to take. Buy one was in profit for a few days. I tried to get into a second buy, and then I got kicked out of that, and then I got stopped out of buy one. I haven't moved on trying to buy Bitcoin, because already then it was quite clear, right, that this asset was going to go further down. I didn't really participate in selling. I was stuck in a very big margin call on one of my bigger accounts. I had to wait for my margin to kind of like cool down, so I couldn't take any trades. But long story short, this pattern has continued to the downside. We have a problem because I need to access some of the other tabs. Now, if we come to Bitcoin, this is the, you know, just to keep tracking order flows, right? When you look at this on a weekly time or on a weekly basis, when they you know, punch out these future positions of institutions, you'll notice that they have been quite more on the sell side than on the buy side for a very long time, right? It looks like it's a very minimal difference here, but I'm going to show you why it matters, and I'm going to show this to you on the 365 Masters Trader spreadsheet, which I've already uploaded for students. It's literally on your drive where all the lecture videos are. There's a folder for this. And if you come to Bitcoin, right, I've updated it. It's the only thing I've updated. I update the spreadsheet once a week, every Monday, right? So tomorrow will be the next Monday. I'll be doing updates, right? If you account for the orders for Tuesday, right, you'll see they're playing a game with you. You see this here. Look at this. This is like a range in market. Right, it's basically breakfast for brokers, where they eat retail traders for lunch, right? They set the table in the morning, and lunch and supper, they're just eating people's money, because there is no imbalance. There's no money that's been weighted to one side. An imbalance is when there is a non-debate. It's so clear what smart money is doing, and we want to trade in the imbalances. But 49.9 in longs, and just 0.01 point difference between the longs and the shorts is ridiculous. Yes, there are more sell orders on the table right now for Bitcoin, as a sentiment indicator suggests, and that's correct because smart money wants to drive price as low as possible. Now, do I think this is normal? I think all of this is normal. I am not in this buy. I know some 365 students are. I know for a fact that a lot of my senior students took this big trade, and there was nothing wrong with it. It was smart, it was short, it was sweet. I did see a lot of people over leveraging, and when senior traders over leverage, it always suggests that they don't think they're going to be in the trade for a very long time, which means some people are thinking this might happen, right? There might be a continued effect. If that happens, then I'll be very excited, because then if markets can remove this 30,000 US dollar mark or come back to the 30,000 US dollar mark, that would be significant. It will be significant for a couple of reasons. Number one, glass effect. This area that's marked in red is very sensitive for Bitcoin. If I could quickly remind you, the area marked in red, the 37 mark, is the exact same area where the whole saga started last year. This is the end of January pump, right? So markets have come full circle. This area of value has two jobs, and it has to choose which job it's going to do. Make that a market memory area and sustain the pump, right? So put it this way, man, and I really wish we had more access. To our Zoom tab. I wish we had more access, because I would love to get to the whiteboard. I would very much love to get to my whiteboard, but I can't, right? If you invested $1,000 US in Bitcoin in January last year, end of January last year, this year you have about $400 US profit. That's how crazy price has gone up and down, right? It's come full circle. You have about 480 because of this little pump, but otherwise your investment would have come back to just $1,000 on the dot. That's what it really means, right? So what happens now is two options. This area can be sustained, right? A lot of whales can come in and repair it by giving it much of a push, more money there. Or this area could fall flat into glass effect and continue falling. Now, while that's what I want, I cannot guarantee that's what will happen. I cannot guarantee that price will actually, persist down that route and fall continuously. If it does, then I will definitely be buying and trading at that 20,000 US dollar level. Literally rebuy every single percent of coin in my household, and then have a big massive trade to the upside. If I can't do that, I'm going to wait and see what's going to happen to this supply. The supply is at about 42,000 US dollars. So it's not really a train smash for someone like me who wants to be patient. For example, if say the bear market is over, right, which is what every single retail trader will want to tell you, so that they can all use your money to sustain the dip, right? Be very careful of that. If it's over, I want to see the supply being broken without me doing anything. And then I want to see price come back somewhere here without me doing anything. And then I want to start to look for a demand that is fresh, that is that meets all our supply and demand rules, for me to then rise up with it. If it cracks the supply, I won't be convinced if it just breaks the supply, because price is going to run into another supply right here anyways at this 47,000 US dollar mark. If I've taught you, you'll know what I'm referring to. Price is always going to look for a supply somewhere here, so if price was to break, I would assume that they're trying to sell high before I assume the bear market is over. Do you understand that? In foreign currencies, the supplies keep getting broken. We can say there's a market reversal, price wants to go up. I won't be in a rush to make that declaration if the supply gets broken, because there is a supply up here anyways, right? So this could be a better sell high position. Another way to look at it is just that I can't fit everything on one screen, because again, my mouse is bust. Is if I look at my fib level, right, price really could mess with people and go back to about 55,000 only to fall again, right? So for me, Bitcoin, once again, is I'm just dollar cost averaging in my everyday wallets, right? It's the end of the month, I put whatever, a certain amount, and I just buy. I don't care what the price is for investment, I'm just buying. I'll only buy holistically when the price is absolutely as cheap as I can get it, before I can invest that type of money. All right, so that's kind of like Bitcoin covered, guys, and more for the most part, the basic history of what's been going on. I want us to quickly get back into why we're here today. I've done oil, and maybe let's just quickly wrap up with Nasdaq in the recap. I did promise that I'd also look at Nasdaq before we start today's scheduled thing. Right, so Nasdaq, and maybe it's how I talk, I don't know, but I need feedback on that stuff so that I talk as clear as possible. This is my chart on Nasdaq, right? And if we go to normal candlesticks, all these lines are not supply and demand lines. We don't trade supply and demand with 3-6. No, sorry, not support and resistance lines. We do not trade support and resistance. So please don't get confused. Right. So I do remember, looking at Nasdaq in War Room 48 and 49, and I think I did a recap, and then I spoke about these two areas here. You see these two areas here, and I told you that this yellow means this is what we bought last year when we're trading. We're buying up. I took profit somewhere there, and there was some further trades later on. But in my previous Nasdaq recap, and I think it's labeled that in the title, in the description, where I write Nasdaq recap. It's the first video, first 4 minutes to 15 minutes of the first War Room in that series. I talk about price potentially coming back in here. All right, so I definitely know I did that last week. Now, price did do exactly that. It came in there, and if you bought here, all right, if you did buy there, and if you listen to the video, I'm not that confident about the buy. So I personally don't have a pending order. So that's why, Mr. Mbasa, I was just trying to figure out where, because I wouldn't have known, because I did not take the trade. I felt it was a cowboy trade. But if you're taking a buy here, your stop loss had to be in about 303, the 13,400 mark. All right, 13,400 mark is where your take profit would have to have been, which is completely under this zone here. So somewhere here is where, I mean, if we're really following textbook way of trading these things, is if this is your order block, which unfortunately I can't zoom into. So I hope to God it's very clear on your guys' side. Let's see. All right, so I'm just trying to make that bigger in an old school way. Right, so I'm saying this is where your stop loss would have to have been, because this area of value is quite big, right? So that's problem number one. But if that was the case and you took it like that, it's a textbook trade, then you should still be in profits. You should not have been kicked out by this particular trade. You should be very happy, depending on your trading psychology, right? Because after the buy happened, there was a big sell-off, that FOMC meeting, and then markets have still been trying to do what is known as a cat bounce. You know, when a cat falls from a very, very high building, it lands like this, right? So that's what you're looking at right now. We call this a cat bounce. And cat bounces are not always the best indicators of a market recovery. All right, so that's problem number one. Problem number two with Nasdaq is this looks like a continuation pattern to the downside for now. It doesn't have to be. It could be the drop-based rally that we need. We could get a V recovery, somewhere in here. All right, so I did make a post on my social media sometime last week that what I would be interested in is how price reacts to a weekly demand. And I apologize, guys, there's nothing I can do as long as some of my mouse's functionality is not working well to make this bigger and clearer. Right, so that looks just terrible. So there we go. Right, so you see here, somewhere here, this is the weekly time frame. So this in here is that weekly demand. Right, so it makes sense why price is fighting back there. And I think I did post on the private group that, you know what, I've been looking for plays in there. I haven't gotten into any plays because fundamentally I'm not happy about the structure in front of us. Look at this, man. This is nasty. Bearish engulfing, green candle, right? This could be a market pause for all we know, right? So it's quite ugly. What I would like to see is, given what the FOMC has said, is almost kind of like set the tone for a little bit of buying between now and March. I won't lie, markets are like, okay, fine, it's a little bit hawkish, dollar is doing well, stocks are kind of like start to slowly recover. So you're gonna see that, effort in Nasdaq, slowly starting to come back to you. But what would help you the most as a trader is something called scenario analysis, right? And I'm going to teach this to all students this year. This is now literally pulling, chapters from my own, academic research around market stuff. I'm just looking for the Zoom function. Okay, there's none. Right, so let's see. Okay, wow, all right, that's a different Zoom function, but I like it. Right, so have a look at this. if you may. This is the weekly time frame. Let's go to the daily. No, actually, we click on the weekly. This is the beginning of January. You see this there? This downtrend here. This is the beginning of January of 2022. All right. Let's find January of 2021. This is the beginning, November, December. Right, so somewhere here, you remember 2021, January starts up, green, red, green, and then boom, flat out to match the previous month, the previous year of COVID, right? So in this January here, there was a slightly better January opening of Nasdaq. I won't lie, it was slightly better. If you look at the weeks ahead, price kept selling, recovering, and selling, right? That's the last week of January. And then in the last month of February, we get a strong bullish engulfing candle that collapses completely all the way until March, right? But I'm just giving you a thesis of the first financial quarter of this asset that a lot of people like. So 2022, it's a drop in the beginning of the year. 2021, it's also a drop in that financial quarter. Let's find Nasdaq this 2020, January 2020, right? It's like a basic baby trap. Up, picks up like COVID, complete drop. But everyone's going to be like, no, but COVID was special. So let's do a year before COVID. A year before COVID, January 2019. This is December, V-shaped recovery inside December. Much better, right? There's just one red candle, it beats a supply, creates another red candle for the most part, and then the sell-off happens just at the beginning of the second financial quarter. This is actually better, to be honest with you, in 2019. But you can see markets like to slam into the following year, right? And lastly, 2018, I think I've made my point. But just so you can see one more time, December, January, all the buying in January is always sold out. Now, it took 4 weeks to climb and 2 weeks to wipe out those buys. So just be very careful about this. Just market cycles, right? This is bound to happen so that this thing doesn't collapse completely. Final word about this kind of stuff, guys. The Fed did say a very important thing, which I don't think I've ever highlighted. He was asked about, you know, what does he think about the current market status? The reason why this thing fell was because he was uncertain. He said inflation is crazy, right? Inflation in the US right now is crazy. So that's not good. And then there's also the supply bottleneck problems, which we thought was going to be terrible, but it's bad, but not as bad as it could get, right? So you've got a strong economy in terms of when COVID started. America is in a far much more better place than it is today, but it's still got all these issues, inflation based on QE. Now, the interesting thing that you need to remember is Powell does not care about your trades. Doesn't care about Nasdaq, it doesn't care about your shares, it doesn't care about your positions in QQQ or your positions in Bitcoin, right? What he cares about is the idea of what these things can do to the economy. So for example, he is absolutely worried about these assets like Nasdaq pushing too high very violently at a very quick pace, which is the nature of Nasdaq. All-time highs, all-time highs, all-time highs. Is very, very worried about that, because when you have an asset that does that, what happens is eventually the high stock prices start to actually to create what is known as asset bubbles. And when you've got asset bubbles, you have high risk. When you have high risk, you get market crashes, right? So his job is to create these pullbacks, right? This is literally his job. Yes, they benefit because they'll also buy the dip, but this is absolutely important to always cool off your asset, right? So I always tell people you need moments like that, right? But long story short, I am done with my recap. I hope that was okay. I hope you guys learned something from that. If you're still around, you're still watching, and you're happy with that, please don't forget to like, just so you know that that was fine for you. I want to just dive straight into the assets we need to look into today. All right, we've got a lot of stuff to look into. And I've just spent the first hour of the war room just kind of like laying out the land, right? So we have on our spreadsheet, by the way, for students only, a very, very good list of swing trades that are kind of like operating for us. So all of you would have had access to this, and I'm sure according to your account size, you know, you are operating, you know, very smart. But this is one way for me to be completely transparent. Or another way, I guess, which is always know where I am at, what I'm buying, what I'm selling, at least in the currencies. Then I'll start to add crypto, stocks, all that stuff, whatever you guys want for students. Anyways, I'm happy to do that. Let's grow the senior trader group. That's my goal. We've had 108 six-figure trade. We've got 108 six-figure traders, and we've got about 36 senior traders in outside of the six-figure traders who should. I really thought all of them were going to cross over into six-figure traders end of last year, but people took profits, reduced their accounts, so now they're just building them back up again. But if 36 of those guys by August, October become six-figure traders, my heart will be so filled. And then those of you in the education group, I need some of you to start growing. And it's not you must become a six-figure trader. No. You need to turn, your capital by 900%. You need to move from capital of 0 to $1,000 and simply turn that into $10,000. You need to show me that you didn't do it via over leveraging. You follow the rules so that you can enter the senior traders program. It's completely for free, but I need people who have gone through the traders process, right? So the first 108 six-figure trader of 365 Trading Academy, I set through all their trading statements, right? And they set through mentorship and the course that you guys are doing. And it was never done overnight. It took almost 2.5 years to produce those people, right? It wasn't, if you're thinking of joining us, it's not overnight. I can't do it for myself. I can't do it for you. Simple. Those guys learned and kept coming for class and mentorship and kept coming for class, and they got into 10Ks, 15Ks, and then they started to see significant growth. And that's just how it is, right? You need to build momentum in your trading. So please, I have no problem with the 36 who are five-figure traders getting to six-figure by the end of the year. My focus this year is on the Telegram group, the private education group. I need most of you, at least 50% of you, to get out of that group and join the senior traders so that we can start to make space. So that's why this year I'm strict on discounts on the course, right? Discounts are ending very, very soon because I don't have, I want to slow down growth in numbers and quality within the academy first, right? It's very important that we create some type of legacy that we can sustain. All right, so yeah, anyways, today's war room is going to be now built into all these, sell orders that we got going, all these sell orders that we got going. I want to build into them by adding more, right? We're going to add more as we always do. Right, so the first asset of the day outside of oil, Bitcoin, and Nasdaq, right? Oil, I told you guys where I want to buy. And I did post a trade setup in the private Telegram group, so everything should be fine. If you haven't seen it, just scroll up if you're in it, right? So oil was sorted. Nasdaq, my thoughts are, let me wait and see. I want to see, how strong this cat bounce will be. I'll be watching daily and H4 time frame, maybe just to give you guys a trade call, because I know that's what people really, really want to see, like where exactly should I buy, right? So if you look at the H4 time frame, we've got a bullish engulfing pattern that gets retested, price goes lower again. I don't trust any of this. I honestly don't trust any of this. This does not sound like the behavior of the Nasdaq that I've grown to know, who enjoys real strong bullish movements. If you look on the daily time frame, we have a good recovery of this buy area that I spoke about last time. Then you get a complete sell-off based on news, and then you get some type of a fight back, and then price starts to do what? Create a Talitha area, some consolidation going on there. Consolidations, as far as we all know, are PCPs, potential continuation patterns. When price ranges like this, it's waiting to get ahead. Are we going to get more buy orders or sell orders, right? The COT report for Nasdaq futures does indicate that, for the most part, markets are playing mind games. Like it's 49.50. I mean, what's it for Nasdaq? I mean, I know Bitcoin is exactly like 49.50, and I'm pretty sure Nasdaq is exactly the same, to be honest with you, because most of the money is leaving, right? So this is Nasdaq. Yes, I remember laughing at this. I remember laughing at this yesterday when I was updating the spreadsheet. So this is the 25th of January. So this is the latest data. Maybe, well, I can't even, can you see it here? All right, so I can't click above. So this is Bitcoin, and just on the other side, all right, there you go. There's the Nasdaq tab. So you see this for yourself. 25th, right? It's not me, it's not my website, it's not my video game, it's just orders. So Nasdaq, we've got 87,000 long orders. We are non-commercial 365. And on the short side, we've got 57. So you technically speaking, you'll be like, wow, dude, we've got what? more longs than shorts. That's what the average reader of COT reporting will do. Wait until you do my module 3. You'll know there's a whole lot more work that needs to be done. Let's look at commercial positions. You got 107,000 longs, but 142 shorts. Right, so this is not enough. We need to see the relationship of their orders this week in comparison with last week and the week before, because we need to see how they are building their positions, right? Building positions are absolutely important. That's literally how smart money thrives. Hence sorry, wrong tab. Our master trader spreadsheet. So now if we look very carefully, look what happened the previous week on the 18th of January. So I want you to see how disrespectful these people can be. Look at this. There was 88,593, so 88,000 buy orders. The following week, there was 87,000 buy orders. So what happened? They reduced. So if you just see the report by itself here, all you're comparing is tomatoes and potatoes. You're like, look, there are more longs than shorts, therefore buy, right? A lot of people make that mistake. A lot of retail traders and mentors who think they're trading fundamentals. They make the mistake. They don't understand the data is interconnected, because last week's buy orders did not just disappear. And those buy orders are still there. They need to be operationalized, right? So how do you operationalize these buy orders? It's simple. Literally, oh, by the way, this is a remote course. If you want to join us, it's a massive discount. Everything is in here, all my lectures, yada 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 yada. Right? I mean, I'm just showing you that it's real, that these folders are not empty. Someone asked me, how do I know that the folders are not empty? Like, yes, man. Like, I know people get scammed all the time, but unfortunately, I am an actual licensed practitioner, so a lot would be on stake if I was lying to you. But anyway, all these module 1, module 2, this year we're doing module 3 and module 4, everything is there for you. Right now, let's quickly go to the master trader spreadsheet so you can see the trick into reading these reports. If you look at last week, there were more buy orders than this week. That's number one. This latest one, they reduced the buy orders. All right. Number 2, look at the sell orders for last week. So last week, there was 58,000 sell orders, right? Okay, cool. Now, this coming week, the 25th, the one that just passed, they've also reduced the selling. And however they've worked out the math, when you look at the total orders on the table, which is both buys and sells, the longs have not changed and the shorts have not changed. There is still 60% of longs and 60% of longs the previous week and the previous week. They've maintained that balance. They didn't do anything more, anything less. They just played with the numbers. They literally adjusted the orders perfectly such that nothing is affected. So there's still the exact same amount of shorts on the table, even though the net positions or the total orders has slightly changed. But if you look at the commercials, and there's no time to get into that, and you calculate non-commercials and commercials, and you come to the sentiment indicator that I created for you guys, you will notice something fascinating, right? Look at this. We're coming from a drop, more sell orders on the table from the 14th of December all the way to the 11th of January, as Nasdaq kept climbing. So I'll repeat that. From the 14th of December, I want to find the 14th of December on the charts. I'm on the charts right now. I really want you to see this, man. I mean, I'm going to teach on it properly if you take the course. But I really, for those of you who I'll never see again, you just visit us on YouTube, please don't forget to subscribe and like. But this is your take home. This is the 14th of December. From the 14th of December, right, which is where I've pretty much placed this arrow, up until some time in January, our sentiment indicator is telling us that there were always more sell orders on the table. All right. Now, if you go to the 14th of December, I really am teaching today. I hope you guys get benefit from this. There were significantly more longs than shorts look, 62% longs, 37% shorts. And then there was a little bit of a cooling of the longs, but the shorts never dominated. And then momentum is built back up on the longs, but they've kept it stagnant. So from the 14th of December, 62 is their magic number. 62, 60, 60, 60. See that there in the 60s for the buys. When you come to the charts on the 14th of December, price was creating supplies. You got more longs on the table, but markets are creating supplies and bouncing off supplies up until the 11th of January, right? So let's find the 11th of January now. I'll find you the 11th of January right now, somewhere there. You see that there? You have to see this, man. I'm gonna get so excited and forget why we're here. But look at this, 10, 11. So at the 365, if I've taught you before, complicated 365 candles, the 11th of December was the final accumulation of all these sell orders. You see here, 14 December all the way to 11. Look at this number, like crazy red. Despite markets trying to push for longs or pretending to build strong longs, the overall weight, the sentiment indicator from the 14th of December kept pushing price down. Then from the week of the 14th of December, what did we start to talk about? A market crash. Right? Because why? They've built up sell pressure, they've extinguished all those hopeful buyers, and markets are now breaking market structure. Look at the dates and look how it aligns with the break of structure. My God, man, this is good stuff. I should sell this class. Guys, this is so important. If you let me know if I'm coming across there on the live chat. Even if you've done the course or not done the course. My room is starting to get a little bit dark. Just let me know. Let me know I'm coming across to you if it's clear. The few of you who are watching live, let me know if I'm coming across clear to you. It's very important because it's literally happened. So the play takes place, which means 365 students, after you do the course and redo it and you master the stuff, no matter how long it takes you, at some point in time in your life, you will get to a place where you will say, markets are not random. You can actually read these moves when they happen. Because there are many signals. From a technical perspective, we broke a trend line. Well, not only did we do that, we had a complicated 365 pattern, which created a pattern for the downside. I can't make it any bigger because of my mouse. I do apologize for that. Reset chart. Oh, okay, cool. That's also quite cool. There we go. There's the 11th right there. 10, 11, right there. Creation of complicated, the final pump up before the massive drop. Now, the reason why this is important is because check what happens after that. Check what happens after that. After the 11th, right, of January, 2 weeks ago on the 18th, is the first time on the table on our sentiment indicator, we have buy orders. But if you watch my war room videos, right, I told you guys, I wouldn't be too excited about this because look, man, we're coming from a place where Nasdaq needed 8,000 orders, 5,000 orders, big buy orders, 500 orders after so much red. Come on, it's not amazing. And guess what happens out? Now we know from this past Friday, they released the COT report of this past Friday. There's negative 4,000 orders. You popped up the market with 500 orders, created it like a honeybee effect. Retail traders, you see them on that silly group, let me not say silly, on public forum groups, where it'll be like 4:30, guys, we're buying. This is it. They got smoked. Look at how uneven the orders are on the table. Ridiculously odd. Now, I know some of you are waiting for a part 2 of the master trader spreadsheet, but if I could just show you something real cool. I need to create a formula for it, and maybe I'll stick the formula up here on every single column, but I'll need time. But let's say I wanted to understand what this means on the table. Like, what does it mean for this week on the table? I would then look at the available data that I have. The only available data that I have is that the latest data is the 25th of June, which is this past Tuesday. Then I'd come here and say, okay, fine. So on the 25th of June, this is what smart money is saying, right? All these cells that I've highlighted in front of you. Very clear. All right, cool. All right, cool. Fantastic. It looks like it's a family meeting only today. Only 365 students, I'm assuming, are watching. So that's cool. Right. So check this out. I'm looking at these orders and I'm like, okay, fine. So there's something that I back tested when I was doing module 3. I told you guys, for me to release a module, I have to trade it 1,000 times, 1,000 trades, and then maintain an 85% win rate. Then I'm like, yeah, I can tell people it works, right? I have to risk my own money, not in demo, in a real market type of situation, and make money from it. It's the only ethical way you can tell people to go risk their money. I think it's the right thing to do. Like, if you're going to create a bot, make sure your bot trades your own money 1,000 trades, because you want to go through market cycles with that. Now, when I was doing module 3, I'm on trade 9, 5.6 or something. I mean, I'll get back to just kind of like 956 to finishing them, but I'm pretty sure we're going to maintain a good win rate. That's why I'm sure M3 is going to roll out this year. When I was doing this, I realized, because I hate indicators, I created what I'm calling the 13th week average indicator. And if you think about it, there are 12 weeks in one financial quarter, right? Just hear me out here. There are 4 weeks in a month. 4 times 3 is 12 weeks. So 13 because the first week of the second financial quarter. So what I'll do one day is I'll create a formula for you guys on the spreadsheet so that every time I add data, it automatically puts it in. But if you look now, so I'm going to select the week before the latest data. So this is the latest data. I'm going to come here. I'm going to look at the long. Then I'm going to highlight 13 weeks of this. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Ah, man, it won't show. All right. Okay, because of time and me creating Excel formulas on Google Docs, it's quite annoying with the busty mouse. I'm going to quickly take the sum. Can you see the sum is down here? So clearly, this has already been tallied for me, right? So sum means all the cells that I've highlighted have been tallied, right? Does that make sense? It's been put together for me. So I just need to create an automated formula for us all to do it. So I'm going to put this number in my cell phone, 486. So it's 1011486, 1011486. Then I'm going to divide it by 13 weeks, right? So if I divide it by 13 weeks, we get that number there. Do you see that number? That number is 76,806 roughly. What that tells me is, and what I do with that information, right, is I look at the latest COT report. So now, remember, I did not highlight the latest one because I want to know how it might impact the foreign week. What I'm looking at now is the fact that here there is 87,909 buy orders. But on an average, the 13-week average, on an average, the average size of logs is 77,806, which means there is still more buys than average than sells. All I am doing with that information is trying to understand where I am in the markets. I don't want to trade because of that, but it's nice to know that if there was a serious, dangerous thing that was going to happen in the markets, like a bigger crash coming, if the orders for this latest week been under this number, right, 77,000, etc., we would have problems. We have big problems because now the buy orders are even below average. And I'll do the same thing for my shorts. Because remember, I only care about what's going on here. So it makes sense that there's still 60-60, but markets now, we must be careful of this. Hedgers need to make profit right now. Corporates that are hedging on these stocks and buying US Treasury yields are hedging that we make the mistake of buying what could be a retracement. This could be a big retracement. And then the sell side is going to kick in. You only know you're screwed, that you're in the wrong side of the trade, of the charts of the trade, when next week Tuesday, when the next COT report comes in. So in terms of market structure, I'm doing nothing, right? Nasdaq, and for me, again, I'm not desperate to trade everything every day all the time, because a long time ago I fell in love with valuing my capital. I like to see my capital. I like to see it grow. I hate to abuse it. But if we're to use volume-based indicators, sorry, candlesticks. Look, these weeks suggest that there's rejection. So it suggests that we found a bottom. We know the bottoms, we know they're going to play 365 numbers. I've taught you all this stuff. It's still on a weekly demand. Sure, sharp, well done. But for the most part, it's a long way up. So the riskier the buy, sometimes the greater the reward. So for example, if you're in any of these buys and you're still holding, then your bus stop is somewhere here. If you are, knowing that there's a high potential for this to happen. Now, do I think it's going to happen? I honestly don't know, guys. It's so difficult. A correct market crash by textbook definition is a 20% drop. You see this line that I have here? Price fell 18%. It's like smart money is just playing mind games. They know exactly what it takes to crush a market and what not to crush a market. And there it is, from the previous all-time high to where markets pause. Markets have dropped 18%. So by textbook definition, we don't really have a market crash. We have a deep retracement. What the fear is this retracement becoming a market crash. And for that to happen, it must proceed to decimate a little bit further, technically speaking, by 3% more. I want to wait to see that. I really do. So right now we've got a PCP pattern holding price on the daily time frame, right, which is the top part of that weekly demand. The top week on the daily is this. But if you notice with our PCPs, if you remember our rules, that there are some areas of value that are susceptible to more damage than others. And this is not those areas of value where you want to see price stay there for a long time. If price gets there, you want to be the first one in and the first one out. So if markets start to bang again Monday, Tuesday in this area, then we'll know they're going for a V-shaped type of demand by a little bit lower, which will be really at the bottom of this weekly demand. And if they do that, if markets do that and they bridge the gap of 20%, so you see I've already highlighted here, you see there, I want to buy there inside this zone. You see there's another different colored rectangle. I don't know if you guys can see it. It's kind of like marked in white. That's where I want to buy just before things get super hot at the 20% mark. I suspect there will be a little bit of saving, and if there isn't, at least my buy is as close as it will ever be to a stop loss, so I won't take too much damage. Now, it's not rare, it's not that often that you get a big dip like that, but it's very common that Nasdaq will pump up and retrace, pump up, and this retracement was big. It broke this weekly demand. You remember I was confident last year saying to you, China 50 has never broken a monthly demand. It's my boy. It never disappointed me. China 50 has never broken a monthly demand. And 2 weeks after that, China 50 broke a monthly demand. So because of that, every time I see a significant, they took out a weekly demand. A weekly demand. Nasdaq took out a weekly demand. Find me another place where Nasdaq took out a weekly demand. It wasn't here. It wasn't here. Weekly demand sustained. Weekly demand sustained. Right? It hasn't broken a weekly demand since COVID. Literally, since Coco 2020. This was when all these weekly demands were smoked, right? So I'm very much interested in seeing, if it's going to follow a certain pattern. But if I want to buy, I would rather wait for good buys at 13,300, 13,400, 13,100, 13,200 on the daily time frame. Align all of that with a very good demand, which is, there's only one anyways on the daily. If you remove the noise, if you use very clear candlesticks, this is the only situation that I'm looking to play into. But I worry some because we bought here last year and price then bounced off here and then created a fresh demand. So technically speaking, if I remove the green, that's me, right? That's what I want to do in Nasdaq. Nothing more, nothing less. And I hope that helps. Woo! Look at the time. How the time flies when you're having fun, right? So let's just talk, guys. I think if you will allow me, I'll have to do another war room tomorrow. It will be pre-recorded first thing when I get up in the morning, about 5 a.m., 6 a.m. Maybe you'll have it by 8 on YouTube, because I don't think we'll be able to finish all these assets today, to be honest with you. But if I could do a good job with AUD Swiss Franc, Euro Pound, Pound Swiss Franc, USD Swiss Franc, and Platinum, I've already covered Bitcoin, then we can call it a night, if that's okay with you guys. If you guys want to keep going, you let me know after that. But I think we'll need another 20 minutes just for me to cover the assets that I just brought up now. Because it's important that in the first financial quarter, normally, as a swing trader, by the way, the reason why we're doing the spreadsheet, by the way, because you guys voted on a poll. I put out a poll in December. Most of the poll, the thing that you guys said you want the most was swing to positional trades. That's what you guys said you want the most. This is how they're built. So it's very important that every Monday we're working on the spreadsheet and we were setting up the play. Every Monday we're working on the spreadsheet. We're setting up the play in our pending order list, because one day when all these things get triggered, and they will, and some will be very good ideas and some might not be anymore at that particular time, But with good risk management and good risk reward, we will always average out more profitably, all right? As long as we're cluster trading, right? And that's why I want to do it painfully practical and slowly with you. I set up most of my swings in the first financial quarter of every year. Like Euro USD hold, we're holding from April till October. I set those things up because it's important, because that's all markets are going to do anyways, right? So let's look at the assets that I just spoke about, and then after that we can then call it a night or continue. But I think tomorrow there might be a need for a part 2, right? So AUD Swiss franc is our first currency asset. I can't move my screen today. I can't go to, you know, whiteboard. I can't do nothing. Can't do nothing. Interesting. Interesting. What do we have here? Right, a bounce back, bearish engulfing pattern. I'm going to jump off ship here. Right, let's quickly find a place where we can assess the damage. Right, so AUD Swiss franc with fresh eyes. Man, I can't zoom in or zoom out. So let's say reset chart, right? That's fine. But you know how it's nice to see the entire thing, the left, the right. You know, I don't even know how water affected my zoom in, zoom out, or is it my mouse? I don't know what's going on, but I wish I could, you know, adjust my screen the way I want to. All right, I give up on that. But look, man, it's almost a buy profile asset for the most part. I can't even move this out of the way. Yeah. Oh, look, it's by the side now. Right, so okay, before I zoom out again, you see that we've got somewhat of a downhill. So it's a sell profile asset. So I think I said buy. It's a sell profile asset. That was a big mistake. It's a sell profile asset, right? Long spikes, right? And that's just because it's married to Swiss franc, which is extremely unfortunate, right? And then here we are now. So we're going to assume we can see the whole chart. Unfortunately, we cannot, right? Because that's just such a dramatic drop. No. No. So I was just trying different things to see if I can get, you know, into what's going on. All right, I've lost everything. Right, so I'll just see if there's a way to zoom in. I apologize. It's just I can't see everything the way I would like to, but I'm hoping a reset and a close would sort this thing out. Okay, this is still here. I don't have time for this, and now I can't even get out of this window. Ah, man, does anyone know how to get out of this? There we go. Right, cool. Right, so AUD Swiss franc, we'll just have to do with what we have, guys. I apologize. Let's go to Saxo so we can actually have a good look. Right, so we're going to sell profile asset, a sell profile asset that's just been selling, and then we're going to start off with our governing time frame and normal candlesticks. Right, and in the sell profile asset over time, we've had this crazy long wicks, which you should be very worried about, but also make it very hard to read how deep is the low, you know. Very hard to read, I must say. I struggle with that sometimes, right? But sell profile assets. So all I can do right now is to deal with the immediate areas of value that are in front of me. That's literally all I can do, because I can't really zoom in, zoom out the way I'd like. Markets are sitting at a demand right now, right? A tired demand. We're trying, and you can tell it went through weeks, or you will see as we drop down, it went through weeks trying to catch itself here. I'm not a fan of anything Swiss franc in general. Swiss franc does very well when dollar is weak. When dollar is not weak, it really acts out like a toddler. It's like because it's generally classified as one of those safe havens. That makes no sense, and I can't see the rest of the chart, so I'm not even going to put in trend lines in case they're faulty. Right, let's go to clearer candlesticks. Right, so it makes sense why price turned the way it did, right? So we can see that there was some type of observation of the laws of supply and demand. Price did what we expected to do. So price hit a supply and not hitting a demand. And the question is, will this demand hold? What kind of a demand is it, right? So you will ask a question, we'll ask another question. This is a 365, typical PCP demand, typical glass effect, there you see it hit there in August last year. It went up in September last year. It went green and higher in October last year. And then price returned. That's the most important thing. Let's put in lines. Let's do a line graph to make it very clear, right? Price return. Right, so you can see here, and this is where price hits, right, in June, July, August. You won't see this in the line graph because the line graph only captures the body, the open and the close, and not the wick. But you can see for the most part, price is just pointing further to the downside. So I would suspect if we use where the candlestick closed, right, markets are already halfway through this order block, right? They're halfway through destroying the buy orders there. But let's not confuse anyone. Let's go back to our normal candlesticks. And for the most part, we've got a situation here. I don't know if this buy is sustainable. I don't think this buy is sustainable. The little that I know about AUD, minus last week's Tuesday's report, is AUD has been weakening. On the spreadsheet, we all should be holding AUD NZD. Right, it was at a one-day I'll teach about trading psychology on AUD NZD and what some of you might have experienced. Right, it only started to want to drop Thursday, Friday, right? But the whole week we were with inside, triggered an entry point, but not hit a stop loss, right? And I can't imagine what that did to some of you, right? But look, for the most part, man, this is not obligated to hold. It is not a clean value-based demand. And honestly speaking, I have no intentions of buying there. All right, on our mayoral time frame, just to make it even more clear. If I was to look for a play on Aud Swiss Franc, I would focus somewhere up there, personally. If I was to look for a play, I really would. I would wait. I would wait for price to come back up here. That's me. Because I just don't see this demand holding. I can see us making money off this demand if you want a cowboy trade, right? And I told you guys about cowboy trades because they do exist and people make money off them, but I definitely don't take them. Number one. Number two, markets are propped up. There's a lower demand at the bottom, right? So this demand could last longer than we wanted to, because there's still a little bit of more buying power, a little bit of buying pressure at the bottom. But it's not clean. It's really not clean. It's really not clean. So let's clean up the charts a bit. And you'll see that pressure is just little into bitty. Right, so if I'm buying AUD Swiss Franc for a holistic swing trade, I'd rather try my luck somewhere down here. I would. And I would wait for something like this to happen in the long run, right? So this is pretty much what we should fully expect between February, March, January, February, March, etc. Long-term trades, that's what's going to happen. Or markets will just collapse under the pressure. Remember, risky assets are suffering. Euro is suffering. Pound is suffering. Bitcoin risky. Nasdaq dropping. AUD is a risky asset, right? So we could get enough sharp, one more incentive in the markets to actually completely sell off, and then price would slowly start to move to remove this area. On the daily time frame, once again, I cannot even, adjust my charts, which is very unfortunate, because I really need to see everything at the same time. Okay, weekly to daily, I would have my stop loss just outside there. If I was to take a cowboy trade, right, I would not trade it like this. Even though you are being extremely accurate and you're going to get a better risk-reward ratio, I would not trade it like that. I'd have my stop loss outside there. But this is not the type of trading I do. I don't take a risky trade. So once an asset proves to me that it's got glass effect, I hardly ever want to take my money put my money on the table. Why? Fresh touch. Can we agree on that? Yes, we can, because it is blatantly clear. That's exactly what happened. Let's put in our area of competition so that we have the same conversation. So I'm just going to choose this little wick there, even though I could have gone as high as this one, because that's where the turn is. So technically speaking, that's the area of competition, exactly where the massive turn took place. And you'll notice for yourself, fresh touch, like I stated, has happened, but I promise you a retest has happened too. Right, so I have no interest in this. If I didn't make money here and I didn't make money there, you won't catch me trying to make money there. I'm not going to do it. I'm not. So I have no interest in this asset. And this, by the way, is annoying, because this indecision of a doji candle that big, touching heaven and hell at the same time, demand and supply, here's a supply there, creates what retail traders believe to be a conducive environment for support and resistance, a range in market. And in range in markets, the most money goes to the broker and the exchange, and people lose money because exactly what you would believe is happening is happening. Your eyes can even prove it. When price came to a resistance, you sold, and came to a support, you sold. The problem with that is it's going to build a pattern where they're going to catch you here or catch you there, one of the two, and liquidity rate is going to take place. And when it does, you are screwed, right? You're absolutely screwed. So I have no interest in participating in any of these levels on price right now. What I would like to do is to corner the market somewhere up there. Sorry, this is not proper. Somewhere up there with a sell. And then hopefully sell through this nonsense to the bottom. Right, so that's AUD Swiss franc. Right, I'm definitely only going to do these assets, guys. AUD Swiss franc, Euro pound, pound Swiss franc, USD Swiss franc, and platinum. Just these 5 because of time. I do apologize. I did take a lot of time to teach at the beginning, but I thought it'd be important. I just didn't think with the mouse and all that stuff, I wouldn't be able to do it as quickly and as efficiently as I wanted it to be. But yeah, Euro pound. And then tomorrow I'll do all the other assets I promised to do. Right, man. This is, if Euro pound was, if someone was to ask me to describe my X's, or my X rather, I don't have X's on my X, I'll describe her as Euro pound. Like, this is one of the most indecisive assets in the history of mankind, man. When you know this asset has to break a demand, and we've been waiting for it to break a demand since 2019, and it survived that, right? So finally, that's been happening, But I did take a lot of short-term trades on this last year. I have not at all this year been in a Euro pound trade at all. But maybe it's now time to consider it, right? So all things being considered, ladies and gentlemen, this demand should have gone a long time ago. All things being considered. And I'll show you what I mean real quick. Since we're only doing 5 assets, then maybe I can do them at a much more controlled pace, if that's okay with you. This is the greatest thing. I mean, I don't even know how to describe this. This is just, that Boris character when he came into parliament. This was my election trade in 2019 when he came into parliament. But look, this is the demand that Boris was supposed to carry or remove, and it was removed. But when it was removed in 2019, as you can see for yourselves, right? For some reason, they with the Theresa May Brexit drama, there's a lot of sagas around this thing. Brexit, UK leaving Brexit, the Euro bloc, all that kind of stuff. How Theresa May left, how Boris Johnson was like the new Donald Trump, whatever. They plastered this area, right, and pushed it up. But you could see that the buyers was literally just 2 candlesticks. It was literally, just so we're all clear, ladies and gentlemen, it was literally just 2 candlesticks. I apologize, my mouse is going a little bit crazy. It's actually done well for a mouse that was soaking in water, but I suspect what's going through its mind right now. Right, so this is all it was. This 1 green and 1 green. The rest of this is a wick, like 500 pips of just a wick of price actually deflating, right? So from up here all the way there was 595 pips. I remember this very well, right? So price removed all the supplies, right, that were currently at place, right, with these big wicks, and then started to slowly come back down. And then we're like, okay, fine, you broke the demand. Because you broke the demand, we suspect you're going to go down. And it is going down now. It is following the rules now. But back then, I was anxious to get this going. So then it gradually started to crack and break. And you can see we're at the bottom of this demand. So only now, guys, only now finally is euro pound setting in for a setup. And the obvious trade, guys, is a long-term sell to the downside. This is way overdue. This is way overdue. We're going to sell all the way to this beautiful mark here. And I tried to catch it somewhere here, made little profits, then couldn't get back in. There was no clarity. And so I'm really hoping to make, sustainable cash here, some really good money, another 500 pips, so to speak, drop, right? But let's clean up this chart on the governing time frame, and then we can see what I'm talking about. Right. So we have to hope that there is one more opportunity left to get into a sell somewhere there within the governing structure itself. I don't see a push to the upside as yet, right? We have to hope that we can find something there, and this is where the problem lies. This is where the problem lies, because really we should have been busy. I'm going to delete that for, I'm going to leave it in. Right, so this is the highest supply of the weekly that created the potential continuation pattern. Then price hit there, then price dropped. Fresh touch retest, right? So we had opportunities. I was just probably traumatized then, and I was just over this thing. And then price started to drop properly. What I would like to focus my attention on as price was dropping, and on the weekly time frame now, is maybe this area here. It's a strong possibility, right? So you always want to see dumb traders, right? Before you sell, you want to see dumb traders. What is this now? Go away. Right, let's try that again. I have no idea what just happened. Right, so pushing markets up just to drop markets, pushing markets up just to drop markets. And I want to keep track of this with arrows in case you can't read market structure carefully, right? Because you want to see the continuation of lower lows being created and lower highs being formed as price goes down, down, and down. And that was like almost a violation somewhere here, but for the most part, the structure is intact, right? So what you want then is to see a very clean break of structure. And I'm old school. I'm old school, man. I want my break of structures to be on higher time frames, right? There's like I couldn't be bothered by your change of character on the 1 hour time frame. Show me commitment. If you show me commitment, I'll show you money. And I'm talking about smart money commitment. Smart money must be absolutely committed to dropping. Now, if I could minimize this damn screen, would be nice to see what's going on the left. It would be nice, right? So this is as far left as I'll ever get. Let's make this small. Right, so there's nothing. You see there's nothing to catch price until that demand that I marked out earlier on the monthly time frame. Right, so this is what I want to see. I really would very much love to see something. I'd love to see price continuing down without me. Then I'd love to see price then come back for me somewhere up here. Then if that price does that, I'll be very much committed to selling. I'll be very much committed to selling. So this is what it looks like now on the daily time frame. So this is cute, right? But I have no interest in it at all. Like I see it, I'm happy for you, 3 candle rule, all that beautiful stuff. I honestly have no desire whatsoever. I've just switched back to no more candlesticks. I have no desire to try and sell up here. This demand is clearly being removed. I mean, so much has happened. We used to talk about a lot of compression. Let's just go to my previous notes on this chart. There we go. Oh my goodness gracious, beautiful. Right, so you guys, if you look on YouTube, if you go to a playlist called How to 2x, 5x, 10x your trading account, I taught a lot about this compression because I traded euro pound like a crazy person. I kept saying, you know, it'd be nice if pound broke out of this for a supply, but I'm pretty sure there was a higher supply somewhere. I am pretty sure there was a higher supply somewhere that I wanted. I'm just going through my previous ones. Yeah, so I wanted actually, to be honest with you, I really wanted price to come up here. Right, but instead, oh God, you know, on its way up there, it started to create these daily supplies, which is fine. You just trade what you see, man. These daily supplies, which then started to hedge price down, really push price down. And as price was being pushed down in the long run, just want to remove these things so it's clear, right? This daily supply, bearish engulfing, that's what started to break these demands, and all these selling points came away, right? So in 2022, you know, I don't want to sell there. Obviously, this is a reaction to an area of value. Somewhere up here would be a far much more better risky sale. Somewhere up here would be a far much more better risky sale. So it's actually quite a high risk sale. It's not really the type of sale that you would want to see. You see yourself risking a lot of money, right? So I'm not that happy with it. It is above this thing, you know, this big supply here, which could be treated like an umbrella so that price doesn't go a bit higher. But for the most part, you know, maybe we try our luck somewhere here. All right, so we give that enough room to breathe, in my humble opinion. Yeah, and there's just no ways. There's no ways I'd risk, you know, or just do something like this. Because if price has the commitment to come all the way here, you best believe they've got enough conviction to drive price all the way higher, shake us all off before dropping again. So I would far much more rather have this whole area protected. And if it was less than 100 pips, I would actually cover more with my stop loss if it was less than 100 pips, but I don't think it is, right? It's about 98 pips. I'm starting to, I can even see these things clearly, right? So this is about 98%, 98 pips. And remember, we want to gain about 500. So this is 1:5, textbook, you know, good trade setup, but we have to wait. Now, if I use my averaging out candlesticks, then this is perfect. I would literally have a sell limit order there, my stop loss somewhere here. Right, so I would sell somewhere there, and then hold. This is I would hold through the pain. I would hold through the retracements. I would just simply hold. If we could zoom the charts in a bit more, I would be able to draw things like weekly Fibonacci's and all those cool things to confirm some stuff. But I'm struggling. You don't want to sell anywhere in here because you're inside a demand, inside a weekly demand, daily demand. Despite the fact that these things have to break, they are still demands. They can still push price up for a retracement. For us to sell here, price has to come up, right? So don't contradict the laws of supply and demand. After we break this entire green area, we all know what's about to happen. We're going all the way down. We're literally going all the way down. So this might be what's going to happen this year. It clearly seems to be. So euro pound, I'm interested in taking a trade there. Pound Swiss franc. You'll notice the charts haven't told us something different. They haven't told us with these risky assets, they are all falling, right? And that's always nice to know. So let's start off with the place where we can delete notes and all that kind of stuff. Right, so clearly we marked this as a buy area and price did buy whenever this was for whatever reason. All right, I'm just gonna clear up the charts. Reset the chart. Okay, look, man, this is a sell profile asset. Unfortunately, we just can't see the whole picture because, again, my mouse has been weird. But yeah, price is dropping, right? So yeah, we in the just the downhill of continuous drops with this pair, which is honestly not surprising. Pound is a sell profile asset for the most part. Right, so as far back as 2016 May, we had a supply that then passed on, the sell pressure, right? It just continued, to do whatever it was supposed to do. May 2016, and then with the same thing here, April 2018, 2 years ago, and then another year, March, April, May 2019, year after year, banks thinking 3 months. You know it, right? There it is, May 2018, bearish engulfing pattern, right? May 2019, bearish engulfing pattern. Annual take profits, right? So then price kept pushing down, came back for a retest in Jan 2020 with the COVID square, tried to recover right into this zone here, weird zone. Draw it for you. All right, so you've got that ladder that I talk about, the ladder to hell or the ladder to heaven. The ladder to hell sells supplies upon supplies, building upon each other to keep price down. Price kept coming down, and then now here markets are bottoming out somewhere there, right? So we've got some type of activity here where markets were reacting to a buy. And look, man, you got a drop, and then you got your first base and your wick there. And then you got this massive doji candle. I would have drawn it something like that. You know, I wouldn't have rushed to catch price. So maybe markets are reacting to a weekly demand. All right, but let's just draw this as green so that we now know we've located our governing demands and our governing supplies. That's very important. We must know where we stand in the markets. Now on the weekly time frame, you can see it. You can literally see it here. All right, markets have been trying to fill this bottom, demand being broken, a new one being created, being broken, retested, etc. Markets are slowly coming down, but I don't know if there's much for them to come down to, unless if we're to go back to normal candlesticks and we have a good look. So this would be a better look on the weekly time frame, right? So now we know there was a strong momentum. This is not a bullish engulfing pattern. I repeat, this is not a bullish, not a module 2 setup, but it does have a strong enough imbalance to sustain and hold price. You can see the number of times price has come, but you can also see that the area of value is still, intact, right? But also allows us to believe that there's a lot of room for the downside, right? Between there and there, price must come back down. The question is it not too late? We're supposed to sell on the second week of January, according to the weekly time frame. But let's draw some weekly supplies. Let's draw some weekly supplies, man. Right, drop. Clean reaction. Bearish engulfing pattern. Price fakes out, breaks it. Why? Because this is a sell high, there's a higher sell up there. Markets broke the supply, which is textbook. We know that they will always do that if there is a better sell opportunity. Then we have another look at what happened then in this bearish engulfing candle plus area of competition. I feel like they're just students today on this YouTube live, at least. I'm sure the rest of the world will join us tomorrow. So you can see for yourselves, right? There we go. 1, 2. You see? So price came for a retest, broke this, and now price is falling, right? And then I always find this setup very interesting, by the way, this year, because to me, I am forced to believe it's a bearish engulfing pattern, and I'm talking about this. But look, I've zoomed in so much, like it's so clown. Right, so this body, remember, green candles open at the bottom, buy low, right, and close at the top. And then red candles open at the top, but then close at the bottom. So price did not fully engulf this. It just looks like it from afar, but price did not fully engulf that, right? And because of that, I'm worrisome about calling this a bearish engulfing pattern. It almost looks like it is, but it really, textbook definition, it's not, because the red candles are supposed to close, open above and close below, way below, right? So it doesn't cover this, but look, it does look like a bearish engulfing pattern. This looks like a retest of it. So we could be, in line for some reselling. Right, so let's pull out our Fibonacci. Right, we want to see a downward pattern. Now I'm going to do a downward Fibonacci. You can see that markets close inside the 0.61 golden area, which was literally linked to an order block. Cowboys, get your guns out, sell as soon as markets open. Cowboys, sell as soon as markets open, because really we should have been triggered on Friday, and we looked at this last week in the previous one, right? And then we tested. Let's have a look at the previous drop. So last time there was this sell high to there. So I'm just looking at the swing low, swing high. I'm just trying to see my relationship with this asset and my golden area of value. Does this asset respect it, right? Scenario analysis, very important, right? And if it does, I am going to have more confidence in the setup I'm in right now. So this is a swing high, price hit, bounce. Okay, let's make this big, but it just gets weird big, doesn't it? Just gets very weird big. How do I do this? Right, so let's say we want to see from here first, just there, those lines. Right, so my swing high from here all the way to the swing low, right? And you can see the golden line is my 6,18 retracement area, something going to my eye, right? And you can see markets rejected here. Boom, boom, boom. Buyers couldn't get through, selling continued all the way down to the swing low, and then markets came back again to my golden ratio area. Boom, boom, boom. A bigger push to the upside, but ultimately rejection occurred. Markets kept punching down. Cool. So now I'm like, okay, fine. So my golden ratio has worked once. You know, I'm just building some type of analysis. Sorry, guys, I'm distracted because of my eye here. All right, so from September last year, 15 September, right, we had a golden retracement and it worked. Now let's look for another one. It worked twice, by the way. So then price started to swing a little bit higher, all the way down there. What am I doing? I'm bringing in that module 2 stuff, right? Let's actually go to cleaner candlestick so we can see this thing carefully. Because module 2, guys, is so important. It's my trader's edge. I study these patterns so I can maximize on them. So I've got a swing high, swing low. So I've got those lower highs continuing. I've got my 2 out Fibonacci, and I'm having a look at what's going on here, right? So I've got this pattern there. And I can see that when the swing high happened, markets created an order block. And in my golden ratio area, I can't see an order block yet. I can see price reacted to something. So let's go back to normal candlesticks and see what's going on. Right, there we go. So in normal candlesticks formation, this is where my golden ratio area is. And inside there is an order block, a 365 candle and a weird dodgy. Right, so there's this situation here, and you can see that the first time price retraced, markets got stuck at that 50% and then dropped. But when price came back more recently, markets never forget about the sell orders, came back into this order block, came back to the sell area, and then dropped right into somewhere in here, and then dropped completely. Okay, that's number one. I'm happy with that. Now I have to delete this previous Fibonacci and just draw the next one. The next Fibonacci that I'm going to draw is this new drop. I'm just drawing them in the orders they come. So then price at some point in time drop from there to there, swing high, swing low. And in the swing high, swing low, market alternated once again. From a market reversal perspective, just went straight through, didn't take this sell here. I know there's another fib. Let me delete this one so you don't get confused. Right, there we go. Did not take this sell here. Why? There was still a golden area. Remember the fib we just drew. There was still a golden ratio area waiting. There was still a higher sell waiting. So immediately this became a bear trap, right? So all the bulls ran through it, sorry, and then price turned there and not there, right? So you got burnt here. If you're trying, it's a bull trap. I apologize, it's a bull trap. You got burnt here because while we were anticipating this was going to sell, it wasn't the best optimum high selling point. Not here, not there. If you go to better candlesticks, you will see that there was continuous non-stop buy momentum just rallying through this area of value until price got into this order block. Cool. So that's another 6,188 fib level used, right? And then I'm now looking for the next one. I can only look for downward fibs because my thesis is prices going down. So the next one is the most recent leg in the markets that we're in. This is where we are now in the markets. We're in this leg of the market. And my Fibonacci is telling me that the golden ratio is where price arrived on Friday, right? So that's a nice quick recap of how to use the tool correctly. I hope that helped you. Right, and price is right there, sitting carefully, reacted to a daily demand zone deeply, which is nice, right? It's nice to see that, you know, the zone that it just bounced from is technically broken. So I don't know if you guys can see it, but if I zoom in, it might allow me to show it to you, but sorry. See that there, this demand here, this demand is broken. It's broken by that much, right? Price really like did a number on it and opened that area down, right? So I would suspect price is going to drop. I would suspect price is going to drop. H4, it looks hella ugly. I would never have taken the trade on H4. It just looks disgusting. Cowboys, you might do this one alone. I mean, it's obvious it's gonna drop, but I like VIP entrance in charts, man. I love getting in first and not because it's happening. I just can't see a way around that, right? So on the 1 hour time frame, price has hit this demand, price returned, price stumbled into some type of situation here where markets seemingly are trying to reject price movement. Looking left, there was a bearish engulfing pattern, price broke it on the 1 hour time frame to go for something higher. Just want to see what that was. What was this higher supply? So there was something going on here. Okay, so that's what price wanted right here. Outside of this, there is nothing, right? On the 1 hour time frame, markets would literally have to first come all the way here, right? Which would be very confusing because they'd have to break the current supply where they're at just to get to this place. But I want to see what that place looks like on the daily so I can make up my mind about what I'm going to do. So on the daily, it makes no to little sense, right? So I'm stuck in two ways. We could try and take the trade. It's just that you guys know I'm more into price coming to me via penny. Well, it's only 50 pips. It's not a lot of money. We could take the trade. We could take the trade. We could. I'm not saying I will. I will tell you what I'll do now. I just need to quickly think it through. I just feel like all of a sudden there's just so much pressure to make the trade, and I don't like that pressure. So I want to quickly understand this chart. If we were to stop where price turned, it would be a silly trade, right? Because that's 1:2. And we now know that this demand here is broken. What we don't know is when they broke the demand, did price start to create a new demand? Does that make sense? So right there, when this demand got broken, did this become the new demand? Because if it is the new demand, you're really literally risking 1:2. All right, so that's not the best trade. But let's say there isn't a demand and we're assuming price will sink lower and this demand here has already been removed anyways. Although we're looking at a bullish engulfing pattern there, that's why I don't want you to ignore the fact that that could be a 1 hour demand. Then we're looking at price kind of like dropping, you know, somewhere here-ish, which gives you a 1:3. Now, if we do that on the daily, we need to find some supporting evidence on our lower time frames. Now, on the H4 chart, there's no ways price is going to ignore this. So let's do it like that. So let's say that V-shaped demand there is important, right? That's still not a good trade. You know, it's not like a perfect 1:3. And that's why, you know, I'm a little bit hesitant around it. I'm a little bit hesitant around it because you can't help but have your stop loss out here. But even that is quite risky because there's still a higher supply. But if price was to push for the supply, it makes no sense. So pound Swiss franc, I'm going to fight the urge to get into the markets now. I will. And that's what really saves me most of the time. Every time I take a short-term trade because I want to trade it right now, it ends up being the biggest mistake of my life. So what I'm going to do then is I'm going to really look at the chart and say, well, what would be the best entrance? If I'm not happy with where price is right now, what would be the best entrance for me? And for me, the best entrance is here. Right, so I'm going to delete this and I'm going to delete all the stuff that's happened. So I'm saying to you, I will most likely just wait for price to come in. That's what I would do. I would most likely wait for price to actually take its time and come up here. Why? Because I want to see what this looks like on the weekly time frame. Yeah, so see where I want to wait for price has come. So I would still rather take that chance on the daily. Yeah, and to me, it makes more sense to wait up there than to start selling now. But if you start selling now, you have, you know, a very, very, very good odds of making a little bit of money. But if you want to know what I'm doing, I'm being honest with you, I'm not going to touch this area. I don't want to mess up my win rate. I would far much more rather wait for that to happen than they, which might take time, might need another leg. So I'll wait for it. So if I am to take a trade, you guys remember my final thoughts will always be on the spreadsheet with all the real entries and stop losses, because I spend Monday meditating upon the stuff we spoke about in the war rooms. Right, so that's pound Swiss franc. And the second last is USD Swiss franc. Thank you so much for those of you who stuck around for the full 2 hours. Geez, this chart is a mess. We can't see exactly, right? So clearly I thought price was going to come down here and then start to make its way up, and so far that's exactly what's going on. Don't remember making this analysis or when or why, but let's just start again, right? So USD Swiss franc in front of us, bullish asset, bullish because the dollar, this is last year was the year of the dollar. And I think I just told you guys that the Swiss franc actually feeds off dollar weakness. So when dollar is not weak, right, dollar will prevail. And we know that last year, 2020 as well, when markets got to a governing demand, price started to push up, and we've got that in front of us here. Right, so for the most part, on the governing time frame, I don't really see a need for concern. If this was a supply, it's gone through class effect, even if it was, right? And the real one is somewhere up there. And that's what we are all waiting for. So I would not be surprised to see a continued push to the upside. More importantly, depending on given the close of the January candlestick this year, which is this one in front of us, markets have now officially created another new demand. So they've created a monthly demand, but it's a very interesting monthly demand because the area of competition is that big. Right, it's literally that big. So price could just continue. We might not even get like a massive retracement back into that demand. Price can just, February just keep going up. The dollar is bound to go up anyways. FOMC has ensured of that, right? So that's governing time frame. On the weekly time frame, you have the end of this range, the range in markets, right, where retail traders probably were thoroughly burnt, right? Markets range for a very long time, almost a year, up and down in here. And then you've got this situation here, area of competition, right? So you've got price making sure that it triggers, fresh touch, retest, right? So we know that they were making away. So what would be nice is this. That's what would be nice. And that's kind of like the play I would want to take on this particular asset. That is, honesty to God, what would be nice, because there's not much I can do. I don't want to really sell. I don't get the sell. Asset is strong. I know the sell might cause the asset to retrace, but I don't want to time the markets. Timing the markets is very dangerous. So I want to wait for price to come and buy with me to the upside. If price does that, and then I'll have to adjust my profit target to here, I would hold until I got there. But to do that, I need to find an entry point in there somewhere. So I'm going to go to the daily time frame. Five students, I do want to go live in Feb, but don't want to do module 1, module 2. I might have to do module 1, module 2 with another group. Then you guys will be welcome to join, but I want to sit down with all registered students who've done module 1, module 2, and we look at a whole new module, module 4 on trading psychology. I guarantee you, you will need it. You will really enjoy it. I thought I'd start on the 1st of Feb, but no, it's impossible. I'm flying out on Tuesday or Wednesday this week, but then I'll be back on Friday. So probably on the 7th was when we'll do it. But there we go. So daily supply triggered, and if you follow DXY, by the way, DXY is a somewhat of a pause as well. So the supply after the Fed pump, Fed gave it a strong pump into a supply. Boom, right? Beautiful. Your assets will always mirror each other. So when you master them, you master everything, right? So somewhere in there was a very strong supply. Markets bounced off that psychological 95 US dollar mark I kept preaching about last year when I said after 95. Bulls are thoroughly in charge. Bulls are thoroughly in charge. Markets did not need a demand to catch it because $95 is a psychological mark, and you need to learn to find these things on the charts. And so instead, markets created a demand and pushed all the way up to a daily supply. So this daily supply now is what's holding, dollar. But then the question is, what's the pullback on the dollar? If I pull out a Fibonacci on DXY, and let's just assume a swing low starts tomorrow. So tomorrow there's a red candle so that I can get that swing high mark, right? This is a guesstimation, right? Then you could get price playing somewhere here. get price pulling back there. I don't know if that's going to happen yet because price hasn't even started giving us a swing high yet. Price hasn't started turning down. But if it did turn down, just want to see. Yeah, that's fairly accurate, right? 365 traders. That's actually beautifully accurate, right? There would be some action down there. So price would try and save itself there. And so you can see that USD Swiss franc is kind of like playing the same game with us. Where's the chart I was on? Right, daily. So there's a daily supply on USD Swiss franc. And I really do want to be a buyer on this chart, but I now need to wait for a demand. It's just difficult, man, to see price falling back all the way down here on this chart. I won't even lie. It's extremely, extremely difficult to see price falling here. So what I'll do is here, I might have to wait for a retracement type of buy on the H4 time frame. So this is the H4 time frame. I'm just going to do the same thing I did with the DXY, swing high, swing low on top of this trend line. I need to check if this trend line is still intact, if it was ever correctly drawn, or if I moved it around by mistake, but there seems to be a demand there and an upward trend line to catch price. But let's just double check this trend line quickly. Okay, so that's point A. So I just need a minor adjustment. Come on, move away. Right, there we go. Right, so I would just a little bit move it. Only because I'm trying to align it with point 2. So this is point 1, this is point 2, point 3. Supply, break of change of character, whatever, break of structure, whatever your trading strategy is, right? But we've got a broken demand here, and I don't want to ignore that, right? I don't want to pretend like I didn't see that when it's right there, because that could be very telling. And then obviously we've got to buy somewhere there. Now let's go back to our H4 buy. Not a problem, Bogie, not a problem. Right, so we've got something there on H4 time frame. That's 10. So this is that weird place that the demands have been broken, but on the H4 time frame, that's as clean as this area is going to get. You know, this is as clean as this area of value is going to get. Right, and remember, we've really adjusted this trend line, right? So if price was to fall below it but get caught by this demand, that would be good. So I'd want some buy power there. I'd love to see the dollar kind of like come back here, but on the normal candlesticks, it looks very weird, right? And then you'll get our brothers and sisters in supply and demand will always talk about reversal of an area. So when a broken demand, you know, becomes a supply, or in this case, a price never forgetting. So if you just draw across, you'll see order blocks trying to confirm this area. So price really could do that, right? It's just confluence of ideas. But the point is, if I'm buying and I want to buy, I think I'm gonna, you know, try my luck here. You know, be very generous with my area of value, generous with my stop loss placement, and then hold. So somewhere here is a potential buy. Until then, I do nothing because my dollar is right at a supply. So we should see it take out the supply, however long it takes. And also we want to see it come back down to get better buy orders, right? But this is a good place to buy. All right, and then the last chart on my list is platinum, and then we'll quickly look at Wongi's request. Guys, I appreciate you for sticking around. I know it's a Sunday. I hope this is not in vain. I would have done this by myself in silence before Traders War Room. I was literally doing this. I want to talk about platinum because I think it would be a nice reminder to everyone of the power of pending orders. But I can't see my marked up chart. And if I can't see it, I will have to I created a TradeView account for my boy, you know, my son, and sometimes he does this, he just messes around with my stuff, right? So I was gonna have to show you this on my live account if I could not find it, because we spoke about this, right? So this was never my trade idea. It was a student's idea. And then price happened, and then most people were like, oh no, it left me. All right, cool, fine, great. And then price came up here and started to reverse. Well, if you go to the weekly time frame, platinum is going up. Look, if you do the research on it, some experts are calling for price to come to 1.7. Right, but if we look at let me start again. I apologize. Right, so let's do a top-down analysis on platinum. Yeah, when the lights go off and you realize how dark it is, I've got sensor lights somewhere. There we go. Right, so the experts want this thing at least to have reached 1.7. It's almost like the same as oil, where you get like the guys who hedge will be interested in hedging platinum. They're looking for a call to get to a 1.7-ish, right? And it's kind of like in line with our structure, right? I'll show you. So I don't know why this trend line is so stiff. I don't like it, but for the most part, this is what a lot of people want to see. They want to see platinum get back somewhere up there. All right, so platinum got up here so far. All right, let's make it a little bit bigger. A little bit bigger. Fantastic. Right, so this is platinum on the presidential chart. You guys remember the presidential chart? 3 months chart, right? You don't have to pay TradeView to see if you don't need it, but anytime you want a presidential perspective, just put up a message on the private Telegram group and I'll quickly send you guys this instead of you paying TradeView for it. And if you want to pay TradeView monthly, it's fine. I have no problem with that. I'm just saying, if you want to, I don't mind if someone asks for, can I just see what the 3 months looks like, and then I'll give it to you. Right, so if you tight knit this or you include that as an area of competition, you get some type of reaction to something there. All right, that's number one on platinum when we spoke about this last year. Then we get a break of structure there, which is very important on platinum when we spoke about this, because then this was the Hail Mary push forward. Then we had to get a retest, which we spoke about. Now I'm going to come back to monthly. As we're going to monthly, you can see they created a nice strong order block there on the monthly time frame. I'm going to switch to normal candlesticks so you can see itself bullishing off in pattern to the upside, and really on the monthly time frame, this is not a clean touch to the supply, but nonetheless price fell, and nonetheless now price is recovering. Then we had a couple of opportunities to maximize on that we kept bringing up last year. Number one, in September, I said, guys, was in. I remember some people being in privately, but some people waiting for another buy. I just don't remember who was who now anymore, right? But it doesn't matter. The point is, whether you see it or not, this will happen all the time. There are areas of value that have a fresh touch only. There are areas of value that get a retest. Do not forget about them. The reason why we have this going on for us is because we understand that. We understand that we can get retests, and we don't want to forget. We want to set and forget. We want to set and forget, and then we want to just hold our trades cluster upon cluster, right? So price came in, though a lot of you said you missed it, so price went up. So this was a perfect time to exit because it's a beautiful swing. This is on the weekly time frame, 1, 2, 3, 4, 5. This is about 8 weeks, right? Number one. Number two, why would you want to hold a buy into a weekly supply? You have to get out. Weekly sell pressure is big. Daily sell pressure is big. In fact, I've always said, until you become a senior trader, you want daily to daily. You want your daily demand to your first daily supply, your immediate area of value. If you do that for 40 times, which is like 2 clusters or 3 clusters, which is like 120 times, then you can talk about swinging from daily to weekly, which means holding even though price is turning and adjusting like that, right? But for most people, day to day is perfect, which means you would have gotten out a long time ago somewhere in here. Price dropped in December. I was shocked. I was literally at home. We were, I don't know, watching Netflix, and I all of a sudden just saw a new trade running on my P&L, and it was platinum. I was like, oh damn, I remember talking about this, right? So platinum came back to collect the rest of its orders in December, and now is ascending to the upside. All right, and this is on the daily time frame. This is what it looks like. Right, markets never forget, guys. And they don't move at the pace that you wish they move to, right? So I would definitely be looking for some type of buy setup as quickly as possible on platinum. And sell setups if you want to sell, but really I would never go against my governor, right? Because I do think this is a good play. This is a very good long-term play up until we get to 1.7-ish. That's a very good long-term play, right? This is not the strongest, so I would wait at the bottom. The one here, not the strongest. I would wait at the bottom. I mean, unless if you, okay, so the zone is quite small for you to take a chance on life, right? So I would have pending order here, tight stop loss, then a proper order there. If you're like one of those cowboys who double dipped and you don't want to be left behind, I would completely understand that. I think the best way to confirm is to throw out your Fibonacci. So I'm going to use this swing low, swing high. Right, so because of that, I would want to buy there, all right, as well. I will still have a buy order down here because I know markets. You see how, so let me show you something. So this is a common trick. You see how this area of competition for the bullish engulfing candle is literally where you would put your stop loss for this area at the top. Does that make sense? The area of competition for the bullish engulfing candle is literally where you would put your stop loss for this trade, right? Because when demands are so close together, guys, right, markets will just push through you and trigger here and then go up, right? Because they know that a lot of supply and demand traders are going to be tight. They want perfect R&R to post about, so they're going to be tight. So they just do you gangster. And if you think about it, if you open the Fibonacci, the golden ratio area is not tiny, right? It's like an entire area up until 78, something percent. So if I draw the fib again from here to there, and then just make this as big as I can, all of this is golden ratio area. Let's remove this so you don't get confused. All of this up until I get to 7.8%. You see that there? Which means it intersects with the lower buy. This is the lower buy. I'm going to make it white right now so you don't get confused. Right, you see that the golden ratio area intersects with the lower buy. So, you know, you could have a pending order there in a very small lot size to swallow everything, or you could just have a pending order here at the lower buy. All right, or you could have a pending order here, a trick from senior traders at the very bottom of this order, which means if you're high risk, you could have a big lot size. Don't do it, but it's a trick. You have a big lot size because your stop loss is so tight there. And if you get kicked out, you lose very small little. And then also if your normal pending order just right there, waiting. But for me, I'm just going to have one pending order there, just waiting for another touch. I'm definitely not closing this buy. I'm not closing at all. I'm not adjusting anything. I want both the second buy to get triggered so that both my trades run all the way up. What I'll do now for profit and growth is the first buy, which is the lower buy, I'm not going to touch. This second buy I'm taking, I'm going to take profits here so that my capital grows while I hold my lower buy. My lower buy is the one you never want to let go of. The lower buy is your first buy. You're saying to yourself, price can't get any lower. And if it does, it's fine. But at least with the second buy, make the money, keep the money, take profit. But if the lower buy continues to run, then you are very, very lucky because then price won't, you know, interfere with you all the way till 1.7. All right, so that's what I'm going to do with black now. All right, so take careful notes of that. And then the last chart of the evening, XAUUSD, which is gold. What's gold doing? How annoying. Gold, how annoying you are, right? Gold is, you know, there's just no need for a safe haven like gold anymore in the markets. Gold. Right, so the last time we looked at this asset, gold was up 75%. If you can just give me 2 minutes, Wongi, so I can just quickly update this thing on gold, then that would be great. So then I can have like a very holistic conversation around it. Thank you so much, guys, for sticking around. I appreciate you. do this for you. I do it for myself as well. Now I'm going to quickly build gold for you on the spreadsheet. So 313415, 313415, 313415. So on the longs, we've got 313415. It's just like minus one asset to do tomorrow, right? When I'm doing the updates. 93264, 93264, 93264. And then I see, so the formula is in, right? So we still have some it's, you know, a strong sentiment on buying gold, at least. But let's have a look at what they've done this side. Right? Am I right? Yes, I am. Right. So let's have a look at the commercials. The commercial side of gold, we've got 130.20 and 8, 130.20 and 8, 130.20 and 8. And then on the sell positions with gold, we've got 379.954, 379.954, 379. I've already forgotten. That's how I know my brain is tired. 379.954. 379.954. Right, then let's see what's going to happen now. All right, cool. So again, they're not yet that committed to pushing it up. You know, there's the illusion that they are, but you know, for the most part, gold is going to linger. Right, so let's look at gold from a technical perspective, then we can talk about this. Now, let's remember what I said about the, because let's test that 13 weekly moving average thing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So I've got 13 cells highlighted. I don't highlight the latest orders, because I want to compare this new order flows. Is it above average or below average, right? And now you can see there's the sum there. At the end of the day, there's 4 million. Is it 4 million? Yeah, it's 4 million buy orders, basically. All right, so I'm going to quickly check out my calculator. 4039419. Right, so 4 million-ish orders divided by 13. Right, and the average size for longs to dominate in the markets is 310. Right, 310,000 orders. And you can see here this week, they pushed it to about, you know, 313. So they're just still edging on the buy side. But if we do the same for the sell side, we'll see. And then there's the double confirmation. Look at this, a much better, I'm going to say, a much better sense of an imbalance in the markets, with 77% of their orders leaning towards longs, right? Leaning towards longs, which is very, very much in line with the stuff that's been happening in the markets for the last, I don't know how many weeks. Sorry, I'm just OCD, and that's the wrong color. So the color that we're looking for here is this one, right? So yeah, you guys get it. It has to be lighter than the other purple, right? So do that there. Do that there, do that there. Perfect. So this purple means strong long. So there's a strong long bias, right? And that's been happening for a very, very long time. And I should actually check. All of this is supposed to be that color, because the darker purple is for when we start to act, a very strong bias. But I feel like they are building slowly, but they've got a lot of work to do against those who are hedging the price of gold. Now, in terms of market structure, kind reminder, gold was always sitting at a demand. Yeah, exactly. Currently at 70% longs. Thank you so much, Alvin. And really, they've just maintained that 77% longs, exactly 100% there, right? So, and that's because, you know, there hasn't been a dominating, and I can remove all of this. There hasn't been a governing supply to take over, right? So gold is still sitting at the backdrop of that demand. And what's interesting about gold, by the way, is, you know, it's dropped significantly, because if you notice, right, we are no fools to market structure. We're not going to ignore this. This is a downtrend. It's trying to leave a demand, but all it's done is create a downtrend, right? We can see this very clearly. We're not going to be tricked, right? An uptrend will be gold doing higher highs, you know, going Samayarin, left, right, and center, right? And we'll give her credit. We'll remind ourselves that gold, this is an all-time high for gold. It's like when Bitcoin hit 65,000. This is the highest gold ever reached thanks to COVID. in 2020, right? And now markets are trying to regroup, right? We know gold's most estimates, they want to see 2.2 and then 2.5 and then, you know, to the moon. But for the most part, gold needs to break out of this structure and slowly start to move up. But this area here is golden for gold. Gold is sitting on top of a very strong demand-ish, but the volume, right, of that demand is based on a doji candle. All right, so we're mindful of that. Now, in terms of what we've seen in the COT report, we need to then figure out what it's leaning towards. And if I was to come here, drop one to the weekly, maybe before the weekly, let's quickly look at everything on the governing time frame. Right, so we've got this situation here where gold created a supply in front of all of us, and it took us a long time to see. It took me a while to even realize what was going on, right? I was still trying to buy at some point in time until I realized, oh no, 3 candle rule was right. Remember, this is just an area of competition, but in terms of price leaving, that rule was already met a while back, and then price came back for a retest, hit the retest, and then dropped. Right, so we've got this situation happening in gold, and then we've got this nasty secret thing going on here. All right, and we really need to see what's going on there, because sometimes it looks like a bearish engulfing candle, sometimes it doesn't. Where is it? Where is that thing now? I've lost it. I can't see it clearly. All right, let's reset the chart. Let's do that again. Right, so I'm talking about this area here. I'm just putting that there so we can see it better, and then I'm just going to make it big. Right, so there. Right, there we go. Found you. Right, and if you look very carefully, this is equal. Guys, smart money is petty, man. It's very petty. Like, you really need to know your stuff, right? And then the markets did push a little bit lower, and then the question is, does it really engulf? Is it an engulfment because price didn't open slightly above? It opened its equals but closed lower. But let's just say, for interest sake, it is a bearish engulfing pattern, right? Let's just say, for interest sake, it just passed the test as a bearish engulfing pattern. What you'll then notice next is this. There was a doji candle that came up next, right? So basically an attempt to retest whatever the hell was going on there. And then since then, markets have been stuck in a range, a dangerous range, a retail trader's range, right? So let's go to the weekly time frame. It's not dangerous, it's just boring, right? On the weekly time frame, you can see for yourselves, we can make good gold calls, buy here, sell there, buy here, sell there, as long as you know to get out on time. A ranged market is not terrible. It's just that in a ranged market, as swing traders for 365, for institutional swing traders, we know that the swing is limited. It's going to get cut short because it's a range. There's always a ceiling and there's always a bottom. That's why I hate them. But I'm not saying don't trade them. They're easy to trade, right? You just find the supply and demand inside the noise. So while everyone here would be looking for a support after price broke this demand, no 365 trader would be here, right? Would be waiting down here for all these demands, somewhere there, this area there, right? More range. Then price reacted to that and went back up. Right now, price is doing this kind of stuff. Dollar is strong after FOMC, I must tell you, remember. So, I'm not surprised that as a reaction, we've got a bearish engulfing candle for last week, right? So we're starting to get that ladder effect, right? Even within the range, price is coming back down to almost challenge, our strong demand, so to speak. I haven't traded gold in a very long time. Kind reminder, by the way. If I'm focused on dollar, I don't care about gold. I'm only in gold if I'm not focused on dollar, and I've been very much for a year now focused on dollar. Right, this is a daily time frame. Just tightening our areas of value, just finding the consistency in smart markets. If I could just make the screen a little bit smaller, that would be great. But you can see parts of my mouse have just, oh, the mouse wheel works. We've been struggling this whole evening. All right, I'm happy. Right, so right, cool. So now let's rock. Let's throw up some tools. Let's throw up some cool tools. Let's see what's going on here. So tool number 1, Fibonacci, from this to there. Let's use normal candlesticks so we can see all the order blocks. Right, so tool number 1, we had a swing high up there, and you know, the first ever swing low would be arguably somewhere there, so to speak. And I'm just going to draw this right across. Right, so you can see from the very first swing high, swing low, markets have returned once or twice, right, and created a new fib. Right, before that, from the very first swing high, the 50%, which I always tell you is a strong retail area, has also worked out, and it's always worked out in a range. I mean, if I draw a line across this area, you'll see here, resistance, 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 breakout, resistance, resistance, right? So it just works. It just is, you know, it is what it is, right? And then this has been the floor for many times on our fib levels, right? So I'm confident in my Fibonacci. But now if I want to become more articulate with it, I start to look at my previous highs, the latest one. No more time to go through all of them one by one. I can still see that markets. Did I drag this thing correctly? I was supposed to drag it down. And I'm dragging down right now, but really, you know, we should not forget that we are still in demand-ish territory. But look at this, even on the daily time frame, golden, a second golden area of value, respected, and then right in it, and a new supply has been created. So this is me on gold. If I was to ever trade gold, I should actually trade gold. Why not? I'll put this as a pin in order. I'll sell here. Why not? Right? And if the trade is a bust, makes sense, whatever, demand is at play, but I would more lean towards the downside. There seems to be, you know, the creation of lower highs as time moves on with price, right? So you have this situation unfolding on gold. There we go. Isn't that nice? I can finally do that again, right? We've got something like that unfolding, and something to watch out for, right? So I'll have my stop loss outside there for gold, just somewhere there inside that zone. And then if I take the L, I would understand why. Higher supply, blah, 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 demand, whatever, but it's worth a shot. I think it's one of those trades that are worth a shot. The thing, I mean, I know they're pushing up. But remember, I've showed you this before on Nasdaq. I also showed you this on Bitcoin. They're pushing up, but what's your sentiment indicator telling you? How does smart money feel? How are they using supply and demand, right, to outsmart us supply and demand traders? And that's what I want you to think about. So for me, I don't know. I mean, I literally, there's not a single bone in my body that wants to buy this thing, right? But I hope someone does, so I can sell it. I hope someone does, so I can sell it. And I hope when they do buy it, that they buy it, you know, without fear, so that I can really, really, really sell it. Because what I'd like is, if you look at the structure that I've just drawn, the uptrend line and this nice peanut structure, is it allows me to sell where price, you know, maybe let's say this happens to price in the next few days to 2 weeks or so, although it's the daily, so maybe price comes here and then markets start to come there, is when price gets somewhere here, I don't have to worry about too much work in breaking structure, because price always breaks out of this triangle. You guys see the triangle? I know there are too many colors. Do you guys see the triangle? Let's make this black. Let's make it thick. Right, so you following my black lines? See, let's see what happens if we do that. Okay, so that won't make sense. If it did make sense, then it's already too late because price has broken out. So that's perspective number one. So that's why I want to sell there. All right, I didn't even see that until I did that now. Right, so you guys see my two terribly black lines. I'm just showing you some basic stuff that we did go through in module 2, but you know, happy to always replay. Right, so we've got this perspective here, and I don't have to worry about market structure. Price has been grinding down lower and lower. So when price eventually comes back to me here, right, it's not, there's not that many buyers to fight with, all right, because the sentiment wants to go down, and I'll allow it to go down. Long term, they will have longs, but to have good longs in place, you must buy low. To buy low, price must come to you. Right, so in this, I'm assuming this very big area of value here is the monthly demand. Right, so then we've got this weekly area where price has revisited several number of times. And I still like the way this trend line is built, right? So yeah, I've got a pioneer structure leading to the downside. The distance, sometimes to the downside is always the distance of the base of a triangle normally. So we can do something from there to somewhere there, which would be a drop in price by like $240. Then we take that same projection and we mark it where we want to sell, which is over here. And then you can see that price might actually be aiming to come down there. And then you'll see me saying it's time to buy if this plays out. If this plays out, this will be sick. If this plays out, this will be very sick. This will be some good morning. Thank you, Wongi, for bringing me here, because I'd love to sell there and then buy there. If I use no more candlesticks, let's see what's going on. Yeah, I'm absolutely down for that. I'm absolutely down for that. We'll talk about the buy another time, but I'm absolutely down to sell gold there. And then if we get Brent, we are very close. So it's not like a wide stop loss. 365, guys, shake my hand. Tomorrow's war room will be uploaded as early as I can get it done. AUD, JPY, Euro, Swiss Franc, Pound, JPY, NZD, USD, USD, JPY, CAD, Swiss Franc, Euro, NZD, Pound, AUD, NZD, CAD. In fact, if I have supper early and everyone else in my family looks tired and I can sneak back into my work office on the other side of the house, what I'll do is I'll just record the war room tonight, if possible. If not, and it's my turn to do bedtime stories or God knows what, then I'll do it first thing tomorrow morning. But I hope this was helpful for you. Those of you who stuck it through the end, I appreciate you so much. My heart is with you. May money follow you. That's the goal. May you keep growing in your knowledge as you grow with your accounts. Have a beautiful Sunday evening, guys. Shake my hand. I know there's a delay with the live, so by the time you see me saying goodbye, I might have already closed the live stream, but I appreciate all of you. Thank you so much. I was going to type on the chat, but again, my mouse won't let me. Okay, there we go. Cheers, guys. Much love. Take care. I might even struggle ending the stream with this mouse. Let's see. Right, so I'm done. I'm just trying to figure out an exit. I might have to shut down the whole laptop just so that the stream can end. I'm not even joking. Well, this is awkward. Don't know what to do. Should I sing meanwhile? I wish I could say, could someone end it for me? But let's see. So I'm just going to try and crash or collapse Zoom from where I am. Cheers, everybody. Thank you. Oh, you guys already caught up with the goodbyes. Yeah, I'm just trying to quit Zoom as we speak, which will hopefully kill the live. And it's not working. Fun times, man. I need to get someone to have a look at this PC tomorrow. Right, but yeah, cheers, everybody. There's not much to do. Feel free to exit. Just going through a technical crisis here. How to do this? But it was good. I almost gave up. I genuinely almost gave up on this whole thing. I'm still there. Feel free to leave. I apologize. All right, what happened? Didn't that work? That looked like it almost worked. Oh man. I don't know what to do. Right, guys, I'm just gonna have to just completely shut down the computer. I hope that'll work. Classic. Find out that I'm still streaming even though the laptop is off. Doesn't sound likely, right? Because I'll have, I could also kill my internet connection, but I think let me just quickly shut down this laptop, right? I appreciate all of you. Goodbye. Goodbye. It's gonna take a while to shut down as well because I can't even get to the shutdown button. I hope it saves the stream though, right? I hope we don't get punished for that. But anyways, if you came, you came and enjoy yourself. That's good for me. Right, I'm just gonna have to crack this thing.